Ladies and gentlemen, kindly make your way back to your seats. We shall begin shortly. Thank you very much. Hello. Her Excellency, Seen Winding Alberg, from the Royal Danish Embassy, Deputy Governor, Bank of Uganda, Dr. Michael Atingi-Ago, the ABI Finance Board members present and senior management, to all distinguished guests, all protocol observed. Welcome to Kampala Serena Hotel today for the launch of the Green Taxonomy and Green Finance Fund. It's nice to see you here all bright and early. I love to see all the green in the room. I think you can see I also did my part today. My name is Crystal Newman, and it is my pleasure to be here with you this morning, to be your host this morning as we go through our program. Ladies and gentlemen, I'd like to just start by letting you know the areas of convenience, the washrooms, are right outside the door. Turn to your left all the way down to the hall. And you can follow the proceedings today on the YouTube channel. That's ABI Finance. So if you've ever wondered what you look like on camera, today's the day. So please, for people who can't be here, let them know that we are live on YouTube. That's ABI Finance. And you can also contribute to the discussions and what's being shared on Twitter as well. The hashtag is ABI Green Finance Fund. Now, I'd just love to say I hope you have all gotten your lovely notebooks from ABI Finance. Since we're talking about going green, recycled paper, all through recycled paper. But ladies and gentlemen, to give you a proper welcome, allow me to invite the CEO, ABI Finance Limited, Miss Mona Muguma Sebuliva. You're welcome.
Thank you, Crystal. Your Excellency, the Ambassador of Denmark to Uganda, the Deputy Governor, Bank of Uganda and keynote speaker, the representatives from Ministry of Finance, Planning and Economic Development, the ABI Finance shareholder representative from the European Union, the ABI Finance Board representatives of strategic partners present, the Global Green Growth Institute, USAID, FAO, UNCDF, chief executives, representatives of regulators, apex institutions, and partner financial institutions, the press corps, ABI management and staff, ladies and gentlemen. A very good morning to you all, and you're very, very welcome. It gives me great pleasure this morning to host you all as we launch the Agribusiness Green Taxonomy and the ABI Finance Green Fund, all which are aimed at supporting the financial services sector, the agribusiness sector in addressing or dealing with climate change, and specifically through climate change adaptation, mitigation, and biodiversity conservation. I've said this before at various other gatherings that I've had of this nature, but it bears repeating because the gravity of the situation is quite heavy. Uganda is the 12th most vulnerable and 49th least prepared among 195 countries globally in addressing or dealing with climate change vagaries. And we're seeing it in the production and productivity of our smallholder farmers and agribusinesses that continues to suffer. And this is evidenced obviously by the extreme natures and changes in our climate through extreme rainfall, drought, and temperature. So the list of challenges is endless, and while we could dwell on the challenges, we believe it is more important to focus and dwell on the solutions. And so what can we do? What needs to be done about climate change? The answer is simple and also not so simple. We basically need dedicated investments in climate change adaptation, mitigation, and biodiversity conservation, which is what we're here to do. But just to ensure that we're on the same page, I'll define these concepts and terms briefly. Later on in the course of the day, I believe we're going to share some flyers with all this lingo and new words, and by the time you leave here, you'll be green finance and green experts in general. But climate change adaptation really is enabling smallholder farmers, agribusinesses to be a lot more resilient to the changes that we're seeing in climate change. For instance, there's use of early maturing seed or drought-resistant seed or flood-resistant seed that enables plants or crops not die due to extreme rainfall or drought. Interventions like trenches, mulching, irrigation all go towards enabling the sector be that much more resilient. So when there's prolonged droughts or rising temperatures, you have seed that is adapted, you have interventions like irrigation that ensure that we continue to have water. Mitigation, on the other hand, addresses the issues of mitigating or reducing our contribution to greenhouse gas emissions. And while sub-Saharan Africa is said to be a very low contributor to emissions, we still must do our part. So interventions in this case would look like clean energy sources, solar, hydro, irrigation still makes it among mitigation. Biodiversity conservation really is looking after animal and plant life above, beneath, or on the ground, and we're looking at fungi, bacteria, birds, bees, natural vegetation. And it is important that we also look after generally the earth as we go about our business and living. So what might your institution do to address climate change? The answer, as I've said, is quite simple, and many of you are already on this path, and it's really adopting ESG principles, being environmental, social, and good governance aware, and implementing these same principles within your businesses. So it starts with good governance, really, where at a governance level from board and management, we get commitment and appreciation of the climate change and what needs to be done, and the impetus to start on the drive immediately. And once governance is aligned, once all the elements of the board, management, and various stakeholders are aligned, resources are then committed towards social inclusion as well as environmental protection to ensure that our entire framework, ESG, is completed, but as well starting from the helm or the principle of good governance, so to speak. And it's important that capacities of staff, systems are built. We are all on a journey, and ABI Finance is here to support our partners in getting to the place and desired stage that we all need to be at. So we are supporting this process in two key main ways. One is the agribusiness taxonomy. And we realize there's a need to have a common language, a common understanding of climate change, green finance, green growth, green investments, you name it. The jargon is everywhere. And so there's need for all of us to be on the same page, understand it. And in partnership with the Global Green Growth Institute, we went ahead to develop the Green Agribusiness Taxonomy, and would like to thank the Global Green Growth Institute for their support on this, and you'll be hearing from them later in the day. But briefly, a taxonomy really is a classification system, a list or manual, if you will, that highlights investment options that are environmentally sustainable, that are green, and also by extension, those that are not green. It covers green investments within the agricultural sector, but also cognizant of the fact that you do not only finance the agriculture sector, the agribusiness sector. This agribusiness taxonomy is extending to manufacturing, to construction, to transmission, to energy generation, to ICT, you name it, so that you find it to be comprehensive and useful and not just limited to the agribusiness sector. The second intervention that we have is the Green Finance Fund, which we're inviting all our partners right from the first tier, second, third, and fourth tier to participate and be a part of. And we have three key products through the Green Finance Fund that we're launching and announcing today. We have green lines of credit worth 120 Uganda billion shillings. We have a green agribusiness guarantee to de-risk the investments, where ABI Finance will be taking the lion's share of the risk and trying to de-risk the investments that are green, where we'll take up to 70% we'll shoulder up to 70% of the risk. And then we are providing the business development support, the technical assistance that is required to build your capacities for your people, for your systems. We are on hand to support with that. Who qualifies? All of you are partners. All our partners in the first, second, third, and fourth tier, all the regulators, the apex institutions, you're all very welcome to use and partake and build on this green agribusiness taxonomy, which in any case was developed with your assistance. Your input, your validation was received last week, and it is a reflection of what your understanding is, what your appreciation is, where the pain points are, and all that has been taken into consideration. For the Green Financing Fund, it really is open to everybody who's financing the agribusiness sector, and you're all very welcome to participate in that. I'd encourage you all and request you all to visit our website, where you'll download the agribusiness taxonomy, and my colleagues Noah Owamajisha and Anne-Marie Mwaka will be coming to take us more through the eligibility criteria, but it's all very simple and easy to access. As I conclude, on behalf of management and staff at ABI, we thank our shareholders and development partners, the Royal Danish Embassy, the Investment Fund for Developing Countries, the European Union, for their unwavering support over the last 12 years. None of this would be possible without your intervention, without your support. Thank you very much. We're also very much grateful to the government of Uganda, particularly the Ministry of Finance, Planning and Economic Development, that is our key partner in this investment, for the enabling and stable economy in which we operate. Thank you very much. We thank our board as well, the management and staff that have worked tirelessly to ensure that this Green Finance Fund is developed and launched, and the agribusiness taxonomy as well. And we thank you, our board members and leaders, for your guidance and your stewardship. Lastly, and certainly not least, our implementing partners, the financial institutions through whom we work, who take the risks, who are out there trying your best and doing very well and doing excellently at financing and supporting investments within the agribusiness sector. We thank you very much, and we look forward to working with you as we green our agribusiness sector, as we green our country. Thank you all very much, and enjoy the rest of the morning.
Thank you very much. CEO, ABI Finance, Ms. Mona Muguma Sebuliba, thank you so much. I like that you said that, there tend to be so many terms, and the jargon sometimes seems to be confusing, but once you start the conversation about going green, about climate change, it's like it's just connecting the dots, and it affects each and every one of us on every level. So to be able to talk about climate change adaptation, mitigation, and biodiversity conservation, we have to have dedicated green financing solutions. So again, we're talking about going green in every possible way. Ladies and gentlemen, now allow me to welcome the ABI Finance Board member here with us today, Ms. Charity Ekudu. You're very welcome.
Your Excellency, the Ambassador of Denmark to Uganda, the Deputy Governor, Bank of Uganda, and our keynote speaker, the representative of the Climate Finance Department. This is the Ministry of Finance, Planning and Economic Development. I don't know if he's present today. The ABI Finance shareholder representatives for the European Union and Investment Fund for Developing Countries, chief executives, representatives of strategic partners present. These include the ones mentioned by Mona. This is the Global Green Growth Institute, USAID, FAO, UNCDF, chief executives and representatives, my apologies, of regulators, apex institutions, partner financial institutions, members of the media, friends, and everyone present today, all protocol observed. Thank you so much for joining us, and good morning. So, I will start by saying that a few years ago when I did research on climate change, and I was trying to understand the legal and institutional framework for Uganda, this was way back with COP15. That was a while back. Uganda did not appreciate climate change at that point, and we were thinking it was this idea, this phenomenon that existed for the rest of the world. After all, we were green. We were just on the path of industrialization. Manufacturing was just taking over. So like many of the developing countries around the world, we thought to ourselves, why should we actually participate in this discussion, in this conversation? After all, we are not polluting the environment. We don't have targets. Why should we do this? What we forgot to appreciate is that things like climate change, so the atmosphere, there are no geographical boundaries. There's none. So what we do here will impact the person there and the person there. And I'm so glad that we've finally come to the point where we say, okay, let's put our back into it and let's also participate. And participation is one of the values for ABI, and I'm glad that with all our partners, this is a value that we share. So ladies and gentlemen, I would like to thank Mona for going through, giving us the background to why we're here today, and the justification for the Green Finance Fund and the Green Agribusiness Taxonomy. We've talked about words and jargon today. I think in the last few months, the words taxonomy, I used to think about taxes, tax, on my earnings. But if you look at it literally, taxonomy, and think about what the taxman does to your money, and think about climate change in that regard, then definitely we are being taxed on the environment side, and we need to pay our dues. So I think taxonomy is actually the right word for it. Thank you, Mona, for emphasizing the negative impact of climate change on agriculture, the extreme rainfalls. Last week, I was trying to see if I could go and plant trees, and I was told we're at the end of the rainy season. But ever since I was told that, it has been raining. So when you think about all these ups and downs and the impact they are having, the planting seasons are being affected. Now, do we plant now? Do we plant later? Is there a short rainy season for us, Uganda? Is there a long rainy season? Do we invest in agriculture now? Do we invest later? These realities and the adverse impact of this indecision that is caused by climate change is very real. So the Green Finance Fund and the taxonomy provide an exciting opportunity for empowering financial institutions with the much needed liquidity, de-risking mechanisms, and technical support to offer green financing to smallholder farmers and agribusiness. The green financing accessed by the smallholder farmers and agribusiness will, in addition to addressing climate change adaptation, mitigation, and biodiversity conservation, also contribute to equitable economic growth, job creation, and improved incomes. If you think about it, agriculture is the backbone of our country. And when you bring agriculture and finance together, you're talking sustainability. Green growth is a key priority for ABI, and as a board, just like Mona said, ESG is at the heart of what we do, and we expect our partners to adopt the same. So, as I close, allow me to re-echo the thanks that Mona has already given, and say thank you to our shareholders and development partners. We thank the Royal Danish Embassy again as a board, the Investment Fund for Developing Countries, and the European Union. We also welcome any prospective partners from the private sector and development partner sector who would like to invest and work with us. Like I said, climate change does not know boundaries. So when you're dealing with an issue that has no boundaries, you cannot segregate who you partner with. It's about coming together and bringing what we each can bring to the fold to deal with the challenge. I extend my sincere gratitude to all the ABI Finance implementing partners, especially the financial institutions, and I can see CEOs present. Thank you for joining us today. And our Apex institutions for your committed partnership over the last 12 years. We look forward to deepening our partnership with you through this Green Finance Fund. We commend and thank the government of Uganda for the enabling environment and the conducive environment that permits us to operate efficiently. So, ladies and gentlemen, thank you so much for listening to me. Thank you all for sharing the value of participation and joining us today as we lead this great initiative and save the world, which is our duty today. Thank you very much.
Thank you very much, ladies and gentlemen. Ms. Charity Ikudu, thank you for your remarks. And yeah, for just bringing it into perspective. Climate change has no boundaries. And in a way, it's kind of like good neighborliness, right? Just think about the people around you. You may decide to tamper with the environment if you're living in a community, wherever you are. But the effects come to all of you, not just one of you. And I like that you mentioned the rainy season. I've worked in the media for many, many years, radio and television, but mostly radio. And when you work in the media, you have to check and double check before you say anything. And the rainy season, the seasons in general have just been confusing of late. So I made sure I checked and I double checked and I got confirmation that it was the rainy season. So I took myself happily to radio and said, aha, it's the rainy season. And then for the next 5 days, not a drop of rain. It was bright, sunny, hot, hot, hot. And I thought I'd gotten away with it. Then someone came along and they were like, but Crystal, didn't you say it's the rainy season? And I was like, but thankfully, the next day, it rained the whole day. And I felt much, much better about that. But ladies and gentlemen, climate change affects each and every one of us. And in the beginning, it just seemed like this conversation that was so far from home. But now, every single day, we see it. We see it in our communities. We see it even with our side projects, should I say. People say you're not Ugandan if you don't have a side gig. And for many people, you have your plot of land, you're doing your thing, and it's affecting you. So it's nice that we're having these conversations, but we're talking about green financing solutions. Ladies and gentlemen, now allow me to welcome the Ambassador of Denmark here with us, Your Excellency, Seen Winding Alberg. You're welcome to make your remarks.
Deputy Governor, Bank of Uganda and keynote speaker, the Commissioner, Development Assistance and Regional Cooperation Department, Ministry of Finance Planning, representatives from Climate Change Department, ABI Finance Board, CEO, Management of Staff, Chief Executives and representatives of development partners, notably the EU, Apex institutions, regulators, partners, financial institutions, members of the press, ladies and gentlemen, good morning. I'm very pleased to be here at the launch of the Green Finance Fund and Green Agribusiness Taxonomy by Finance. At the Danish Embassy, we truly believe that these interventions will enable Uganda's smallholder farmers and agribusinesses access the much-needed finance for green investments. Investments that will help them adapt to climate change, mitigate emissions, and conserve biodiversity in Uganda and abroad. This is a national event, and the fund and the taxonomy offer a national audience and offer use here in Uganda. But the purpose is indeed global. Just last month at the COP27, it was made clear once again that the world needs to act on the challenges of climate change. They affect us all, but they hurt the countries that are least developed and least prepared the most. The Green Finance Fund and Green Taxonomy is part of such action to curb climate change and to adapt to the consequences. As you've heard, the government of Denmark co-founded ABI with the government of Uganda in 2010. And since then, we have been very pleased with the achievements over the last 12 years, where notably 1.2 million beneficiaries have accessed agribusiness financing, of whom 30% are female. The female part is important, as we also know that climate change affects women disproportionately. Now, in the wake of the climate crisis, the sustainability of these beneficiaries' business and other value chain actors is at threat. Today, we are gathered to learn more about and launch the ABI Finance response of green finance interventions to address the climate change challenges in agribusiness. We are convinced that ABI's Green Finance Fund and the Green Taxonomy will enable partner financial institutions and their customers, which is the Ugandan smallholder farmers and agribusinesses, to go green and to become more resilient and sustainable. As Denmark, we shall continue supporting ABI Finance green initiatives as much as we can. Key among our priorities is curbing the negative effect on climate change that cause great risks for smallholders and their livelihoods, globally and in Uganda particularly. We have a strong overlapping priorities with ABI Finance as we continue to work for sustainability of the agribusiness sector, job creation and poverty reduction in Uganda. I'd like to extend our gratitude to our co-funders, the government of Uganda, for the enabling policies and environment that make these interventions possible. We continue to rely on your support and active engagement. We also thank the latest investors and shareholders in ABI Finance, the Danish Investment Fund for the Developing Countries, IFU, and our friends at the European Union. We thank you for your commitment and support to ABI Finance and to Uganda financial services and agribusiness sector by extension. Once again, let me conclude by congratulating the ABI Finance Board management and staff on this bold initiative, the Green Finance Fund and the Green Agribusiness Taxonomy, and we wish you even greater success going forward. I thank you.
Thank you very, very much for that. Ladies and gentlemen, I hope that you have all had some refreshments, some coffee and tea as we have these conversations. I'd like to make sure we don't keep you too long, ladies and gentlemen. So allow me now to invite our keynote speaker, ladies and gentlemen, the Deputy Governor for Bank of Uganda, Dr. Michael Atingi-Ego. You're very welcome.
Your Excellency, the Ambassador of the Royal Kingdom of Denmark to Uganda, the representative of the Climate Finance Department, the Minister of Finance, Planning and Economic Development, the Chairperson, Directors, and the CEO of the ABI Finance Limited Board, Chief Executives and representatives of development partners, Apex institutions, regulators, and financial institutions, management and staff of the ABI Finance Limited, the media fraternity, distinguished ladies and gentlemen, a very good morning to all of you. Let me first of all thank ABI Finance for inviting me to address you today. The United Nations and the several scientists report that humanity is losing the battle against the global warming. The risk of overshooting the target of containing global temperatures below 1.5 degrees centigrade above pre-industrial levels is near certainty. Extreme weather conditions reflected in the increasing intensity and frequency of terrible floods, fires, and droughts is wreaking havoc on the lives and livelihoods. Combating climate change requires urgent actions to contain carbon emission, innovate and invest in new sources of growth that repair rather than hurt the environment. The fact that we're losing the war against climate change implies that we need to amp up the investments required in sustainable activities that are different from the older sources of growth that depleted the mother nature. Today's launch of the ABI Finance Green Finance Fund and Green Agribusiness Taxonomy is timely, appropriate, and meets the prevailing urgent needs for green finance. Moreover, by identifying the assets and projects needed to contribute towards delivering a low carbon economy, the taxonomy that will also be launched today removes the guesswork about investments that would be most impactful. I am most pleased that AB Finance has prioritized interventions in the agricultural sector, not least because it employs 70% of Uganda's labor force. Until now, our rain-fed agriculture has depended on God's mercy. And much as humanity has collectively contributed to the harmful global warming, the negative impact has fallen disproportionately more on the poor African countries like Uganda that contribute minimally to carbon emission. Therefore, it is fitting that AB Finance Limited was founded and supported with generous support from development partners from the richer industrial world. I therefore commend the Royal Kingdom of Denmark and all the development partners for supporting the transformation of our agricultural sector. It will take collective support of bilateral, multilateral, and development banks and private sector partners to establish the supportive policy framework together with appropriate financing mechanism to channel resources committed to environmental, social, and governance, that is ESG, principles to transformational projects in the neediest countries like ours. On our part, as Bank of Uganda, we have prioritized ESG principles in our policies and operations. We recently launched a new strategic plan, 2022 to 2027, where we have a strategic initiative of institutionalizing an environmental, social, and governance framework across all the regulated financial institutions so that the financial institutions, especially banks, commercial banks, prioritize social good and sustainability in addition to making profits for shareholders. To date, we've been doing preparatory works on this. Come 2023, we are going to move into action with the commercial banks. So we'll brought action in 2023. Indeed, we recently recast our mission statement to read, to promote price stability and a sound financial system in support of socio-economic transformation in Uganda. As a purpose-driven organization, we are now going beyond delivering the traditional mandate of price stability, financial sector soundness, and a robust payment system to ensure that our deliverables have a more direct impact on the lives and the livelihoods of the people that we serve, including through corporate social responsibility. The Bank of Uganda is going to encourage the banking sector to review its business models by incorporating initiatives that address economic challenges to create value for the communities that they serve. This will be achieved through holistically embedding environmental sustainability in their core business strategies. Banks will need to leverage emerging technologies to channel financial resources into creating decent jobs and sustainable economic opportunities, particularly for the underserved and the vulnerable population segments, while improving their operational efficiency. Overall, we believe these initiatives will motivate credit and broader financial services extension to support the promotion of entrepreneurship, innovation, and inclusive prosperity in society so that safer, better, and high-paying jobs are generated for the majority of Ugandans that are currently excluded from the financial sector. Through a new climate change risk policy that was recently adopted in Bank of Uganda and other programs, the Bank of Uganda will require the banking sector to review its business models by strengthening the links between the preservation of the natural environment, that is including green financing, which supports agriculture, and the risk-adjusted returns sought by their shareholders. This will be achieved holistically through embedding environmental sustainability in the business principles like I've mentioned earlier on. Now, we aim to integrate climate risk management in macroprudential and risk-based supervision, as well as the monetary policy framework. This arises from the fact that climate change directly affects the delivery of our mandate, because extreme weather causes price volatility and exposes the commercial banks' balance sheets to risks, such as the potential defaults of agricultural industry borrowers. It also negatively affects our exports, which are largely agricultural products, thereby diminishing forex earnings and putting pressure on our on our exchange rate. So you might recall that food crop inflation in the month of November 2022 was recorded at 27.2% annual inflation, whereas the headline inflation was 10.6 in November, down from 10.7 in October. So you can imagine that the average consumer price index inflation is 10.6, but food crop inflation is 27. What does this mean? It means that because of the extended drought condition we had, it has affected the prices, food crop prices. And for Bank of Uganda to foster price stability without addressing some of these issues, it becomes a challenge. So we need to look at it from a sustainable and a holistic approach. That how do we ensure that this volatility that comes on account of changing food crop prices, on account of the changing climate, is minimized. So that's why we are prioritizing the aspects of climate change. And also, if we are going to talk about socio-economic transformation, we need to improve on the production and the productivity of the majority of the Ugandans. Like we say, 70% of them are involved in agriculture. So if we can secure the environment, we are going to secure the livelihood of the 70% of these Ugandans. And if you can do it through the sustainability, social sustainability angle via the ESG, then the livelihoods of these people will be enhanced by ensuring that they participate in the provision and receipt of financial services. If we can have some of the products like microloans and savings extended to the bottom of the pyramid, I'm sure this has the capacity to increase their own outputs and thereby ensuring their livelihoods. And of course, if we are going to diversify our export base, we need to add value. We need value addition to our products, including agriculture. And how can we talk about value addition if we have not addressed some of the risks towards value addition that the agricultural sector is exposed to? So that's why value addition is going to not only concentrate on increased production and agro-processing, but also is going to address production and productivity. And I'm sure through agribusiness initiatives, we can address all this. So, in addition, Bank of Uganda is going to adopt sustainability factors in foreign reserves portfolio management, address the data gaps, and build capacity for conducting and reporting on climate risk analysis. In implementing our sustainability agenda, we hope to learn from ABI's green taxonomy as well as the experience of running green finance funds. These initiatives are a source of optimism. Collectively, we can design and implement solutions against climate risk rather than merely shelving successive scientific reports about the progress of global warming and returning to the usual business of pursuing growth at the expense of Mother Nature. ABI is therefore demonstrating that climate change is the business of business. We commend ABI Finance for putting together this Green Finance Fund and Green Taxonomy, as these initiatives will enable financial institutions to implement ESG practices. This offers more financing to agribusinesses and smallholder farmers for green investments, leading to resilience and sustainability of both financial services and agribusiness sectors. This fund and taxonomy will foster a vibrant green finance ecosystem by harnessing technology and innovations to build markets and solutions for transitioning to a climate resilient and a low carbon future. For example, green finance for investing in climate resilience practices such as growing early maturing seeds will enable farmers to harvest early, sell early, and repay their loans in time, hence improving the performance of loan portfolios in their financial institutions. Greening operations of financial institutions through investing in resource-efficient technologies and practices such as digitalization will reduce the carbon footprint as well as that of their clients. As you are aware, digitalization enables access to savings, investments, payments, insurance, and loans through mobile phones without traveling long distances to physical brick and mortar branches of financial institutions using carbon emitting means of transports like motorcycles and vehicles. I call on all financial service providers to utilize this Green Finance Fund and Green Agribusiness Taxonomy to build and extend affordable and user-friendly green financial products and solutions to all Ugandans. I would also like to thank ABI Finance for promoting ESG and green finance through an inclusive approach that brings all the key stakeholders such as development partners, government agencies, regulators, apex institutions, financial institutions, and research and training institutions. We all have individual institutional roles to play in combating this climate change. The Bank of Uganda will continue supporting ABI Finance green initiatives that are helping to alleviate or minimize adverse effects of climate change, which is causing a significant risk for smallholder farmers, agribusinesses, and financial institutions. Before I conclude, I'm reminded of a scripture in the Bible. It is in Genesis chapter 1, verse 28. I'm not going to focus on the earlier parts, but God said somewhere that we should subdue and have dominion over the fish in the sea, birds in the heaven, and every living thing, creeping thing on the earth. And he said this before the floods in the days of Noah. So it means that everything was okay. There was no climate risk. Everything was green. We were supposed to subdue and have dominion over the earth. I know earlier on he said, go multiply and fill, but let's forget about that one. Let's just talk about subduing and having dominion. I want to believe that what ABI Finance is doing here is you are taking us back to the capacity to subdue and have dominion by restoring the green environment that God was talking in at that time. We can only subdue and have dominion if we have a green environment. So Abby, keep up the initiatives. We can have a discussion about multiplying and filling the earth later on. So, hearty thanks again to Abby investors and shareholders, including the Royal Danish Embassy, the Investment Fund for Developing Countries, IFU, and the European Union for their commitment to Uganda's financial services sector and agribusiness. Thanks to the ABI Finance Board, management and staff for delivering this Green Finance Fund and Green Agribusiness Taxonomy from ideation to implementation. You have our unceasing support as Bank of Uganda. Thank you for your very kind attention, and may God bless you all.
Thank you very much. I'd like to ask that you remain on stage. Dr. Michael, please remain on stage as we get into the launch. Thank you for that nice Bible verse, but I have a feeling some people are fixed on the last part, go forth and multiply. I don't know why. I just have that feeling. But I think it's a reminder, just because you can doesn't mean you should, right? Ladies and gentlemen, we're now getting to a point where we have the official launch of Green Taxonomy and, of course, the Green Finance Fund. I'd like to invite back the ambassador to join us for the signing and official launch. I'd also like to invite you, Mona, the ABI Finance CEO, to come back, and our board, a representative for the board chairperson, that is Ms. Charity Kudu, for ABI, to join us. So I have markers here in black and green. Your Excellency, please join us. I think I shall give you the choice. If you want to go with green or black, he's going green, ladies and gentlemen. So if we can all have your attention, ladies and gentlemen, green. This is why we are here today, to look for green financing solutions, and that is where the ABI Green Finance Fund comes in. So I'd like to ask that we have our Deputy Governor please sign. Anywhere on the board? Oh, wow. We're all looking at that like, what about my signature? Your Excellency, please. You're next. You're welcome to sign as well. So I'm guessing the black markers aren't very popular right now. Thank you so much. Ms. Charity Kudu. And Mona as well. All right, round of applause, ladies and gentlemen, please. Green Taxonomy and the ABI Green Finance Fund are officially launched. Thank you so much for taking the time to be here. Looking forward to positive change as we continue to come up with green solutions. Ladies and gentlemen, another round of applause. Now we have more people that I'd like to invite to come up and sign, but at this point I'll invite our guests on stage to make their way out for the media engagement. I know they're waiting anxiously, so we have a room prepared for you. Thank you very much. And while they step out for the media engagement, ladies and gentlemen, to our ushers, we're still here. I'd also like to invite some of our CEOs and members here with us from the Uganda Bankers Association to come up, from Equity Bank, from the Association of Microfinance Institutions of Uganda, from Financial Technology Services Providers Association, the Uganda Institute of Banking and Financial Services, and the Uganda Microfinance Regulatory Authority. Could I also ask you to join us here to also sign? I'll ask that when you sign, you initial the organization or financial institution as well, so we know. Okay, you don't have to use black. Green. Thank you very much. Thank you, ladies and gentlemen. Again, kindly also indicate the institution. Wonderful. All right. This is when we know someone is fit. I don't know if I can stay in that position very long. Thank you. Again, another round of applause. This is why we're here. Green Financing Solutions, courtesy of the Green Finance Fund, courtesy of ABI Finance. We are now going to take a break, ladies and gentlemen, a short tea break. So please feel free to get yourselves some coffee, some tea, and we shall continue with our program in a few minutes. Please come join us, please. Representative from the European Union. Sorry, how could I? Reno Black. I will not be adding my signature. Mine is not as fancy, I will say. So ladies and gentlemen, we now take a short tea break, have you some refreshments, and we shall continue again in a few minutes. Ladies and gentlemen, kindly collect your coffee, your tea, and make your way back to your tables. We shall be continuing in exactly 5 minutes. So I'd like to ask that you come back to your tables, get settled, so we can continue with our program. gentlemen, welcome back from our tea break. I hope you've had something yummy to eat. I tend to use that word a lot, yummy. People think it's a child's word, but I'm like, no, there are yummy things to be enjoyed in life, and we shall talk about them. Well, again, we all know why we're here. Green Taxonomy and Green Finance Fund, the launch. And we're here to have real conversations, game-changing conversations, and of course to hear testimonials as well. So ladies and gentlemen, allow me to invite the Manager for Energy, Environment and Climate Change at Equity Bank for her Green Finance testimonial. Please give a warm welcome to Miss Virginia Semakula. You're welcome.
Okay, good morning, everybody. Energy and Environment, Climate Change Manager at Equity Bank. Under Equity Bank, we have our corporate philosophies: transforming lives, giving dignity, and expanding opportunities for wealth creation. Our vision is to champion the socio-economic prosperity of the people of Africa. And our mission is to offer integrated financial services that socially and economically empower consumers, businesses, and communities. We have our values here: professionalism, integrity, creativity and innovation, teamwork, unity of purpose, respect and dignity to our customers, and effective corporate governance. This inspiration is that when our years turn, our vision is dim and gray, we shall still be seeing beauty in the tired wrinkles of our faces, and shall take comfort out of the fact that knowledge that when we were given the opportunity, we did all we could to empower our people to exploit the opportunities and realize their full potential on the road to economic prosperity. That's what we stand for. These are our corporate philosophies. The Equity Bank Network in Uganda, this is it, transforming lives in Uganda, one outlet at a time. We have the Equity Bank channels. We have a network of 49. Just yesterday, we launched the Nansana branch, which made it 49. We have agent outlets, if any of you have seen the Equiducas. We have point-of-sale terminals and ATMs. We have new branches coming up. In Kampala, we have about 22 branches. Our social pillars. Equity Bank is hinged on two pillars: the social engine and the commercial engine. Under the social engine, which is under the Equity Group Foundation, EGF in short, we have enterprise development and financial inclusion. EGF stimulates job creation and economic growth by providing micro, small, and medium enterprises with advice, mentorship, capability, individual and household financial training, by connecting people at the bottom of the pyramid. And those are the people that we are looking at. We have education and the leadership pillar, which seeks to break the cycle of poverty and develop the next generation of leaders through increased access to secondary and tertiary education. And I will show you the figures right after this. We have the food and agriculture pillar, where we help to create jobs, improve market access, and expand the agriculture production. So we look at the entire value chain within the agriculture and food pillar. Under health, we increase the access to comprehensive health financing and private sector-led, affordable, high quality, and standardized health services. This will be launched in Uganda very soon. It is already in Kenya, but it will be launched in Uganda very soon. We have the social protection, where we work with the refugees, where we are committed to reduce social and economic risk and vulnerability and alleviate extreme poverty by transferring cash to these refugees in the settlement camps and the host communities. We have the energy and environment pillar, the one that I head, where we promote conservation and smart use of natural resources by expanding the forest cover and improving water security and promoting the use of renewable energy and energy efficient technologies. Our business model, the economic and social engine and how they catalyze each other. And here you see that under the financial literacy, we enable today's unbanked to be tomorrow's bank customer. So we take them through financial literacy, and then we are able to onboard them as our customers. We have entrepreneurship training, where we are training today's workforce to be tomorrow's employer. These are the figures that we have worked with, how many we've been able to train under the entrepreneurship training. Under the education and leadership development pillar, we are targeting today's learners who will become tomorrow's productive economy. So we have the ELP program, which was launched in Uganda in January of 2022. And so far we have about 123 ELP students who are mentored, and we pick them from the branches where we have branches, in areas where we have branches, and they are taken on as into the banking sector, and they are given internship. Under food and agriculture, we are transforming subsistence farmers to agribusiness, and that is one of the reasons we are here today, to transform the subsistence farmers, and that's the impact so far. Under the supporting of communities, where we have the social protection, by providing a bridge to a better tomorrow, that's how many households we've touched under our social protection programs and how much we've been able to disburse. Under the energy and environment pillar, growing for a sustainable future, we have so far disbursed 4.6 billion Uganda shillings within the climate finance area. We have planted those many trees, about 9,000, and we hope to grow that number. We have been given some green financing funds from UECCC and another partner, CIDR Pamiga. And then we had the EquiGreen loan product that was launched, and I will show with you shortly what that looks like. And then we also work with UGEFA and are able to, it was launched in September of 2021, and we have funded about 8 or 9 enterprises under the green finance model. We have specific intervention. We have household level, where we are promoting the use of solar at household level. We have institutional level. We have cooking systems within the institutions. And then we have water sanitation and hygiene, where we are promoting water harvesting, use of renewable energy among institutions. But then we have the climate smart agriculture, where we are promoting solar water pumping, solar drip irrigation, water harvesting, storage, biodigesters, name it. The reason we are here today. Our impact so far, we have, as Equity Group Foundation, we have over 300,000 households that we've reached with renewable energy products, impacting over 1.2 million households. We have over $10.3 million worth of charcoal and kerosene that we have saved through our initiatives of home cooking systems and solar home systems. We've reduced about 200 tons of carbon dioxide. We have over 21.2 million household savings by switching companies and businesses to clean energy and households. Then we have over 15 million worth of clean energy products distributed at household level, 240 million in climate-related projects between 2019 and 2021. We have planted over 100,000 trees across the network of Equity Bank its subsidiaries as well. We have planted 7.2 million trees. And then we are looking at 54,000 wash loans disbursed, and those millions impacting 270,000 people. We are looking for areas of collaboration where we can provide affordable financing to access clean energy products and projects along the entire value chain. We are looking to have financial literacy training and building capacity even within our institutions. Carbon offset and green bonds that will probably enable us to probably finance those doing forestry as projects, and then environmental restoration. This was a product that was launched in June of 2022. And these are the businesses that we are promoting. Solar for lighting for homes and businesses. We have solar home systems that do other things like heating and cooking. We do improved home cooking systems that use alternative fuels besides firewood and charcoal. Water sanitation and hygiene, and climate smart agriculture. That is the EquiGreen loan product that's available already at Equity. Thank you so much for listening.
Thank you very much. Ladies and gentlemen, Miss Virginia Semakula, joining us from Equity Bank. Thank you. It's quite something to see it in perspective when you hear about the interventions and then how that has affected the environment. So ladies and gentlemen, we're now having these key conversations, and we are talking about green financing solutions as well. So allow me to invite our next speaker from the Uganda Bankers Association, the Executive Director, Mr. Wilbrod Owor. Please join us.
Good morning, our distinguished guests. I think Mona did a fantastic job in lining up the protocol. Allow me follow the protocol and say protocol observed. This is a very, very special morning for all of us. And special in that ABI Finance is carrying a torch, a very important torch. Like other speakers mentioned earlier on, the terminologies appeared complex, and yet they are speaking to realities of the day. Equity Bank has made my job much, much simpler for the wonderful things they are doing across the industry. So allow me start by, first is to salute you, Mona, and the team you lead and the various development partners for carrying this torch, and most importantly, working with the financial sector in carrying this torch, in preaching this gospel. You know, the DG is very biblical. He always closes his speech with a quote from the Bible. But you have led the way, not for anything else, but because of the risk that we see across our economies if we don't attend to these climate change risks and prepare for adaptation and risk mitigation. The DG mentioned the plan for 2023 in their strategy, and as members of the financial sector under the UB umbrella, we are embracing ESG big time, because our stakeholders, starting from shareholders, but also our customers increasingly are saying beyond profits, what are you looking for? How are you safeguarding the environment from which you derive your business? And sustainability is high on the agenda. For those of you who, if you have been from the north, when you pass Matuga as you come to Kawempe. Have you seen the factories there? Yeah? And they are huge factories. They are emitting stuff outside, waste in the water. Last week, actually, there was an article in the newspaper. The residents in that area, they are saying we are getting choked, and sometimes we have tears, because of what is being emitted. And when I was coming from that side, I first looked this way and saw that. I said, it was an eyesore. I tried to look this side, and it was another eyesore. So I looked at the road instead. Now, we as financial institutions, we finance those factories, isn't it? We give them loans to expand. And the gospel today by Mona and the DG speaks to this challenge. And therefore, we do appreciate that we are huge partners in this process. And as we lend, we must be careful about the challenges that this brings. Unfortunately, in this part of the world, we are still a developing country. And so you are faced sometimes with the challenge, a good business comes, good cash flows. We look at cash flows when lending. Where will my loan be paid back from? And this manufacturer gives you a good plan and you lend. I think what the taxonomy and green growth, and increasingly, this will become more and more critical in our policies, in our appraisals, and even in regulation. We are again very glad to ABI for the three things that were mentioned, that were launched. Of course, the direct lines of credit, but more important, I think, will be the business development side to it, to those that we lend to also appreciate what we are all trying to achieve. And even our various partners, as we go lower the tiers in the financial sector, that this is well appreciated because the lower tiers directly approach the lowest player in the agricultural value chain. And to see that they are capacitated right from the financial institutions, but even up to the lowest level, so that it is one message cutting across. And that's why we really salute you. We know how far we have come with ABI on the many initiatives in the financial sector. I think that as we drive this increasingly, we will be recognizing those financial sector partners that are championing this, implementing, reporting on them to get it well grounded across the economy. And as the DG left, I was telling him on the sidelines, very many things also depend on the regulator. Within their ammunition of tools, they have numerous tools under which they control the financial sector. And as they recognize or as they apply risk weighting in the facilities, if green facilities covered by 70% guarantee frameworks are risk weighted differently, those are wonderful signals for the financial sector. So mine is really to join everybody else to salute ABI for leading us and carrying this torch, but also walking with us through this journey. What you have preached is clear. I think we will become disciples. I'm trying to copy the DG. Is it working? Become disciples so that we carry that message. You can see a Christian, whether it's real or... so that we do this together. I know even beyond this, along the agribusiness chain, we have come a long way. And this has helped us lend much more to sectors that we previously feared. So I think we'll work together through the detail. Again, thanks to the approach by DG and BOU in how it is prioritizing ESG matters so that we become central in how we finance and support green investments. So on behalf of the Bankers Association and all the member institutions under our umbrella, once again we salute you. You have our commitment to work with you, but most importantly, we embrace this direction. Thank you very much.
Thank you very much. Ladies and gentlemen, another round of applause for Mr. Wilbrod Awar. I like what you said. We've come a long, long way, but there's still so much more to do. And ABI Finance has come through in so many ways. All right, ladies and gentlemen, I'd like to invite our next speaker to make their remarks. From the Association of Microfinance Institutions of Uganda, please give a warm welcome to the CEO, that is Miss Jacqueline Mbabazi. You're welcome.
Speaking after Wilbrod, I have to put the mic as low as possible. So thank you so much, ABI. All protocol observed. Thank you, ABI, for organizing this event and for this direction in particular to bring an awareness on issues of green finance. You know, most financial institutions think that issues of environment are not their concern. It's not any different in the microfinance sector. Green finance was not looked at as a priority in the not so long ago days, and every time the topic came up, and so the question would always be, what is our role in green finance? We are in the business of money, and how does this really affect us as financial institutions? Let's leave it to the NGOs that are looking at environmental issues, and let us concentrate on what we do best. And that has always been the attitude of the financial institutions in the sector. But as time goes by, we notice that this issue is not an issue of an individual, of a particular sector. It is an issue that affects us all, as the previous speakers have already alluded. If you look at the biggest clientele of the microfinance sector, it is smallholder farmers, and these are the ones that have been adversely affected by the issues of climate change and the environment. And if these are affected and their livelihoods are affected, and yet these are the ones we are lending to, then that means that our business is non-existent also. So that is how it becomes critical for us as a sector to actually get involved in issues of the environment and climate change. While we know that there have been some initiatives to actually try and deal with it, especially issues to do with mitigation like renewable energy and so on, it has majorly been by accident, where customers are trying to respond to needs, MFIs are trying to respond to needs of their customers, but it has not been a deliberate effort on the side of the financial institutions to think that they would actually have a role to play in these issues of green environment. But as you well know, for us as microfinance, social impact has always been critical, and we always look at ourselves as social enterprises, because apart from profitability, most of us measure the social impact. It's the environment that has become now the third leg in this sector, and I can say that opening up to it is a trend that we can see now. Of course, the major issue remains on capacity building. What should we do to support this willingness that the institutions are showing in dealing with issues of environment? And so I think as Apex institutions in this financial services sector, it's a very big role for us to be able to build the capacities of our members who are willing to participate. While seated this morning next to Goretti, I said, oh, they have the banks now, when the deputy governor mentioned the importance of ESG to with the BOU regulated institutions, who are like, oh, this time they have the banks also, come and look at some of these issues. So, in any institution, what is measured is what is done. So if we look at environmental issues as just a part of our corporate social responsibility, or just as something that we are doing to help people, it will always take the backstage. And the staff will never feel that it's their responsibility to actually give it any attention. So I think that the beginning point for us would be building the capacities of institutions to be able to have this institutionalized as part of what they do, to be part of their daily MIS monitoring and incentives for staff who achieve the goals that they are set with clear targets, with clear performance indicators. And so that is when we can actually say that we are taking this seriously. But if we keep giving it the angle of an activity that we are doing to support institutions, then it will always take that backstage. So I think as associations, that's a role that we will be playing to ensure that this is anchored and institutionalized at policy level. And I think it comes well with the ESG that we are looking at governance. For instance, our board members discussing issues of social impact and environment. If they are not discussing them, then why would you waste your time having to put any resources in such an initiative if at board level it is not being catered for? So I think we can also support our members in product development, such that when they are developing their products, they put an environmental lens in each of these processes. So the assessment would include seeing the impact of that particular product, the environmental impact of that particular product. And probably this is something that could, help in the mitigation measures. Of course, awareness. For us as an association, we've seen that peer learning has been critical. So it was nice to hear the story of Equity Bank. And if we have such institutions that can share the initiatives that they have been doing and how they have been able to, promote this issue, then I find that peer learning has always been a best way to be able to show the others that there is this part that you can play and you can play it as best. I think that is all I love to share, and to say thank you so much to all the partners that are supporting this initiative. And we look forward to working with everyone here to ensure that we anchor issues of the environment and climate change in the financial services sector. Thank you so much.
Thank you very much. Ladies and gentlemen, Ms. Jacqueline and Babazi from the Association of Microfinance Institutions of Uganda. I'm going to go up here very, very gently. As ladies, we love pointy shoes, but sometimes they're not our best friends. Well, I like what you talked about, that you've been having some interesting conversations over there, and peer learning, the importance of peer learning. So we have all heard that. I hope you said hello to the person next to you, you found out what they do, and you continue these conversations. Earlier, I talked about the beautiful recycled paper notebooks that we have received from ABI Finance. Aren't they gorgeous? Or is it just me fanning out? I think they're lovely. Please take them with you and use the notebook. Because people will ask you, oh, wow, that's nice. Use that to continue this conversation. Next, ladies and gentlemen, allow me to invite the CEO from the Uganda Institute of Banking and Financial Services, Ms. Goretti Masade.
Thank you very much, Crystal. Good morning, ladies and gentlemen. I also want to stand on the earlier recognized protocols and start off by thanking greatly
ABI Finance, and the shareholders for a wonderful initiative. There are very many initiatives that we promote, and some mentally or academically, but there are some that start from the heart, and they warm up the heart. And I guess this is one such initiative. Why are we here? The Uganda Institute of Banking and Financial Services, we are member-owned by all these financial institutions that are regulated by Bank of Uganda. But our major mandate is to promote professionalism and financial inclusion among both the providers and users of financial services. And we do this through training, through research and consultancy. So when we speak about an issue like this one, where you realize it's very, very important for us as a country, specifically because it touches agriculture, this is a place we have to be. We do recognize, as has been already said, that it's very difficult to involve everybody in the economy without thinking about agriculture. We also recognize the importance of starting with knowledge, with awareness, to drive an issue such as this. And because of that, we are joining with you, ABI, to support our members, to support the country, and ours is going to be in the area of financial services development. So our role is going to be developing curriculum to understand this taxonomy thing. I was reading it, Noah sent it, and it got even more exciting, because very often when we think about climate, we are thinking about renewable energy. And that's where we started as an institute. But there is so much more, and you've broken it down. The industry we serve has got about 15,000 staff. And when initially we were going through a renewable energy training of our trainers, it became very clear that it's not only them that should have been in that room. It's actually important for each and every one of us to be in that room, to learn about renewable energy. How much do you use? How much would you like to change to renewable? And how much would you like to invest? What is the return on investment? These are very simple terms, but also complex in a way. So we started off with renewable energy thinking, oh, we have green finance and we are going to train green finance. With the taxonomy, we realized that that's not it. There is so much more with the mitigation, adaptation, and biodiversity conservation. Why is it important for us to start the training? Then it shows it's deliberate. But what we have also recognized in our thinking at the Institute, and I have 2 members of staff here, is that it gets to the heart, it gets to the head. In my home, these days, I collect all the polythene, I collect all the bottles, and I put them in a corner, and there is a lot in one household. So very recently, as an organization, we ran the Banking and Financial Services Awareness Month, and we, working with the partners and ABI, said the theme this time round would be start small, grow big, and be green smart. It is being said here. Wilbur talked about it. When you're setting up these factories and making money, investing, even at home, we should be thinking about those challenges. And we believe that when we train every member of staff, every staff of the financial services sector that goes through the institute, if we ingrain that as part of the training, it's awesome. We have to start in our homes. So for us, the commitment is how do we make the staff aware so that we start with the 15,000 staff and their homes and their family members. I think it will be great. So on top of curriculum development, it is the events like the Awareness Month we are running right now that we hope to use to create awareness. And on that note, I invite you, we will be having a Green Finance exhibition next week, 16th to 17th, and I hope we can all participate to start this conversation and make the wider public aware. We intend to also have an e-learning platform, a well-resourced e-learning platform, where you, at your time of leisure, can go and learn either for learning or deliberate for what you can do with your the people that you are with. So we are very that if we are going to change this, there is a formula. Interestingly, there's a formula to everything. For instance, this is all about behavior, and we need to start off with that, creating awareness, the knowledge that will change our attitudes and eventually get us to practice. We are excited as the Institute to participate in this initiative, and thank you so very much.
Thank you so very much, Ms. Goretti Masade. Ladies and gentlemen, the Uganda Institute of Banking and Financial Services, our CEO, and the reminder that we cannot exist in these echo chambers, essentially. Gone are the times when, that's your problem, that's your business, it does not affect me. And that brings me to, again, why we're here. We're talking about green taxonomy, and I'll be very honest, when I saw green taxonomy, my head went, You know how dogs kind of go, I was like, okay, green taxonomy. And then learning a bit more, it all made sense, because all the decisions that we make, we have to, of course, look at the economy that we thrive and exist in, and how taxation affects every aspect of agribusinesses, right down to your smallholder farmers, to each and every one of us, essentially. So I'm still enjoying this education, still going, sometimes. And I'd now like to introduce our next speaker, who will be joining us online. Ladies and gentlemen, to present on the taxonomy, please give a warm welcome to Mr. Tigran Sukiasyan.
Hello, everyone. It's been just a couple of days that I'm back from Kampala from an intensive engagement process and presenting taxonomy to the key stakeholders. By the way, can you hear me well? If my voice is, please someone indicate if it's okay. So I go forward with presentation. Yeah, so it's okay, thank you. So, and now I'm delighted to present this taxonomy that we've been designed in very participatory process throughout the entire last couple of months, engaging donors, API client institutions, experts, and influencers who are working in the field. And I believe that this will be a very important document in terms of advancing agenda, green growth agenda of a very capable institution, which is ABI. So let me, without further ado, to proceed with the presentation of the taxonomy.
We're receiving you loud and clear. Thank you. Please go ahead.
So, as I've already mentioned, the process of designing taxonomy includes a review of national best practices available at this stage, design of some preliminary document, consultations, intense consultations with the key stakeholders that we carried out in September of this year, finalization and final presentation being done just last week. So there is a quite significant body of knowledge available about taxonomies, mostly country-level taxonomies, and that was very specific also in our assignment, that we try to design organizational level taxonomy that will be applied throughout operations of specific organization. However, there is a significant body of knowledge available on the subject, and we reviewed, you can see on the screen, starting from new taxonomy methodologies, climate bond taxonomy, World Bank guidelines, and a couple of country case studies, which from different perspective, we believe that they have something interesting to take away and incorporate in a document that's been designed by us. So we reviewed specifically three country taxonomies: Mongolian one, South African, and Sri Lanka's green finance taxonomies. All of them are most recent documents and containing quite a descriptive approach on how this document should be structured and how the process of identification and validation of eligible green projects should be implemented. So in designing the document, we applied the 7-step approach, starting from definition of strategic goals of the taxonomies, which I must tell that they are universal across the countries, across organizations, but then move to also selecting environmental objectives. As you can see on the screen, some of them include climate change adaptation mitigation, sustainable use of resources, biodiversity and ecosystem, etc. Then we've been tasked the next task was to identify what are specific sectors. And there is what is the biggest difference between country level and organizational taxonomy, because we needed to identify which are those sectors that currently ABI is engaged and what are those that in a midterm visible perspective ABI is planning to be concentrated on. So we went through entire list with all the theoretical potential sectors and subsectors to identify the ones that we believe that closest to the ABI mandate. And then also definition of who are the specific users of and beneficiaries of taxonomy and what are their benefits. So as you can see, we also discussing in the document approaches on development of taxonomy and screening criteria for do not significant harm approach, which is another important element of the document, along with promoting something that is green, that is eligible under our taxonomy framework, but also make sure that it does not make a significant harm on other important environmental objectives. You can see, I just jumped to the table because it's self-explanatory. You can see here the major actors and their utilization, their benefit from application of the taxonomy. So of course, first it comes ABI, and its benefit is to be able to structure products, green products, in a manner that they correspond to its green growth strategy. And for such a green banking products that are eligible to increase efficiency of disbursement, lower transaction costs, and last but not least, also increase awareness about and ensure recognition of it as a green financier. The beneficiary, important actor in this entire system is a financial regulator, the Bank of Uganda, where it, potentially in designing through its regulatory interventions, it should consider the evidence from implementation of application of green taxonomy, because we believe, as being adaptation-oriented taxonomy, it is designed in a manner that after some test run, it should be replicated and scaled up, not only in Uganda and picked up by other organizations, but also in the countries of the region. So the importance of lessons learned from implementation of taxonomy is very important, and the financial regulator is among those who are beneficiaries. For making informed decision, in terms of policy formulation, it is important to periodically analyze the statistic. And statistical analysis of financial flows towards green finance priorities is another important aspect. Here I need to also mention that this is exactly why and when implementation of organizational level taxonomy inform the process of designing country-level taxonomy, something that Uganda will shortly start, and such kind of feedback will be, from our perspective, very instrumental in terms of helping to create a better country-level taxonomy. And of course, also what is important for green regulator to combat greenwashing, when through very strictly identified eligible sectors, it will prevent the green finance to flow to those that are not positioned or identified as such. Of course, ABI clients will be among beneficiaries, because if we are talking about streamlining credit products, increasing efficiency, decreasing decision-making timelines and costs, the beneficiaries, clients, are the ones who will ultimately benefit from that. And last but not least, another layer of actors, beneficiaries, are policymakers, because as it was in case of with Bank of Uganda, having information about needs, priorities, and current status of beneficiary sector, this will help the policymakers to come up with right policy decisions. Because the entire toolkit of promoting green finance in any country, under any settings, starts from policy, regulatory, and fiscal incentives, which are many countries introduced in order to create enabling ecosystem for green finance. And on the top of that, then the financial instruments that are designed or provided by API donors to directly finance specific eligible activities. But as we're discussing with many of stakeholders, taxonomy and instruments that are tailored and implemented through this document are very critical, but only first step towards boosting green growth and towards channeling green finance to the priority sectors of the country. There need to be ecosystem in place, and that's important prerequisite for analyzing the feedback from a private sector, is important prerequisite for taking the correct decisions on policy, regulatory, and fiscal incentives. As already mentioned, these are the 6 overall objectives of taxonomy, and these are universal across countries and across organizations. As you can see, this is mitigation, adaptation, sustainable use of resources, ecosystem, and restoration. But what's specific is already when we are talking about operational objectives of the taxonomy, which is basically the vision of ABI and the vision of its partner organizations on how to become a green finance champion, and what are the key linkages with ABI's green growth strategy and its multi-year to attract larger volumes of climate finance and become a kind of catalyzer in order to attract and distribute this from the donors to its beneficiaries. Just quickly go through the process of how the screening process will be implemented. So first is when we receive application, when we receive request, the first step is understanding and see potential beneficiaries if they contribute to the 3 following objectives. First, the sector should contribute significantly towards at least one of the key objectives of the taxonomy, the thing that we just reviewed. Second, it should be that it do not significantly harm to other key objectives of the green taxonomy. It's very important aspect that by doing contributing towards some of the objectives, we do not significant harm elsewhere. And third, we need to make sure that intervention, that investment, the sector meets minimum social standards defined by the national legislation. Well, a bit later we will discuss it in greater details, but for the moment I just wanted to mention that it cannot be, even if it's entirely green operations, but if there is mismatch with the social standards, labor requirements of the national legislation, this activity cannot be in any way considered as eligible under our taxonomy. Second step itself is like going through the compendium, one of the backbone of our document. And the second part of presentation, I will visualize you how it looks and what are the key structure of compendium. But for the moment, let's fix like it's long list of all potential sectors, subsectors, and eligible operations, because we need to be very clear about what specifically we target and what kind of specific investments we are interested to promote. So going through entire compendium and identifying if this is something that basically being considered by ABI as a priority is the second step. Then there are a set of technical screening criteria that each, not each, but some of sectors has a minimum qualification ratios. Just to give you a feeling, if we are talking about like energy efficiency, something that we consider as a priority, then there should be a threshold, like reduced energy consumption by 30%. Below that target, we do not consider as an energy efficient intervention. All metrics is taken from international best practices. And of course, throughout the implementation of the taxonomy, this is something that ABI and organizations, institutions that are responsible for its implementation will periodically monitor and provide with some feedback. But still, all metrics that is in our taxonomy document are in compendium. They are taken after meticulous review of the international technical standards. The fourth step is evaluation of activity against the do not significant harm approach. And for each sector and subsector, there is a specific methodological guidance on how to ensure that each of 5 objectives of do not significant harm approach are aligned. So it's as mentioned, it's there, and one of the important limitations that we from the beginning, actually we'll talk about it at the last part of presentation, but because there is a lot of information about worldwide available about taxonomies, there is very little evidence on implementation of taxonomies on an organizational level. But there are already some constraints, information about constraints and potential limitations. So from the beginning, we're guided by a few assumptions, among them to make it a technical document and answer to potentially all questions that any evaluator will have during the process of assessing compliance against taxonomy. So that's why when we go through the just visualization of the compendium, you will see that it's rather quite technical document. And it will serve as a methodology, guiding evaluators in a step-by-step manner throughout the entire process of the assessment. The fifth step is assessing against minimum social safeguards. As I said earlier, if activity, if investment is not complying with Constitution, national labor and environmental standards, which defines employment conditions, including occupational health and safety conditions, compensation, gender, and other. This cannot be considered. So if it employs, putting it more simply, if it employed children of ineligible age in accordance with Ugandan legislation, or the operator do not create minimum health and safety conditions, there is no way that it should be included into should be covered by our taxonomy domain. And the sixth step is assessment, analysis of information gathered during the review process and making the final decision. So now you see on your screen the screenshot of Benzium, how it looks. Basically, it's three big sectors: mitigation, adaptation, and cross-sector. And in this table, you see we disaggregate sectors starting from macro sector. On your screen, you see forest and lodging. And then for each macro sector, we come with specific activities. In the case of our table, it's afforestation. Then by saying simply afforestation, we provide a lot of place for misinterpretation and misunderstanding. That's why for each specific activity and sector, we very meticulously describe what is this sector. If there are, for example, in case of afforestation, there are specific guidelines of FAO that defines what is afforestation. There are specific criteria in deciding if this is if your activity corresponds to these criteria, then it can be considered as such. On the third column, you see metrics and thresholds. Here, if you recall the case, my example with energy efficiency, here we have all qualitative and quantitative information metric that we require for each particular subsector to comply with in order to be considered as an eligible activity. And last but not least, the column where we provide for each subsector with detailed step-by-step guidelines on how to carry out not significant harm assessment. So basically, it's like 30 pages compendium of such kind of information where all eligible and prioritative for ABI sectors being identified. I created such a table in order to give you a better understanding about the coverage of the sectors, and you can see, like, I just cut away all the information, detailed information, just leaving sectors and subsectors for you to better understand what kind of intervention framework we are talking about. And just once again to mention that it's been a result of very technical work with ABI experts, where we took entire long list of eligible operations, and just sitting few days just with taking away those that are not relevant for ABI's operation. So for mitigation, you see forest and lodging, agriculture, with all respective sub-activities or eligible investment projects. Then continue with manufacturing, electric power generation with all modern renewable technologies included, solar, photovoltaic, concentrated solar, wind, and bioenergy. Then the fifth subsector, water supply, sewage, and waste management. and construction, where we basically talk about renovation of existing buildings, because there is a huge energy saving component potential in a greening potential in existing buildings, but of course also we are talking about new standards for building residential buildings, also non-residential, but many taxonomies make the first focus on residential construction. And then we move to the adaptation, the second macro sector. Again, here we have agriculture with all potential investment areas, followed by financial services, construction again, but already in a construction that is, because just to prevent some questions, in a mitigation part, we're talking about construction that results in reducing GHG emissions. In adaptation domain, we are talking about construction, for example, construction of climate resilient warehouses or storage systems to improve disaster risk preparedness, etc. So we are basically talking about adaptation specific construction activities. And then other green objectives or cross-cutting sectors, where you can see, for example, as long as agriculture is concerned, we are talking about replacement of synthetic fertilizers. Manufacturing, we are talking about plastic recycling and other subsectors. So basically, this last couple of slides present you and brings you, gives you understanding on what is the compendium itself. And as I mentioned in the beginning, she's a backbone of our taxonomy. Once again, wanted to underline that this is our preliminary thinking, though we had a very good understanding. We passed through very good processes of validation, two-round validation with different stakeholders, but still, this is our preliminary thinking, and throughout the process of application of this document, ABI can come and with some additional modification, both in terms of sectoral coverage and their metrics. Then, as we discussed earlier, from early design stage of the document, we, based on a review of international best practices, interview of some people that have experience in designing and implementing organizational level taxonomies, we try to pick up the key challenges and make sure that our taxonomy addresses those. So some of them that we incorporated, you can see on your screen. And basically, the biggest one is unspecific use of proceed. Because when you provide a general lending to the, let's say, dire operations, it's very difficult to think or to engage for each specific activity and see if it can be considered as green, and no. And if we are talking about a couple of thousand eligible activities, it becomes administratively impossible to manage. That's why from the beginning we targeted the following. We don't care if a specific business is green or not, as long as the project that we are financing is green itself. Like returning to our example of dairy producers, so like if it installs, for example, solar panels or makes energy efficient upgrades, as long as this project is green in its essence, so we don't care at the end of the day about the total operations of beneficiary itself. And this is something that can be captured at the level of loan disbursement. But again, to track, to monitor if organization in general, it corresponds to our benchmarks or not, it's administratively, it's almost impossible to do, or requires completely different level of resources available, which we believe it doesn't need to be so. Another challenge that we're thinking that unified, because once taxonomy is adopted, approved by the board, and PBI proceeds with its implementation, then its client organizations, these 40 organizations, are the ones who need to enforce this. And we need to make sure that unified reporting is ensured across all organizations, meaning engagement of resources, including human capacities, etc., etc. So this could also be challenging, and that's why from very early stages of consultations with the key partners and stakeholders, we came with the idea of design management software that will help and streamline the process of data collection and analysis. It's not a part of a key focus of my today's presentation, but I just wanted to say, to talk about this software, management software, that I hope will be the next step in implementing this taxonomy. But I just wanted to give you understanding that whatever challenges were identified, we try to come up with certain solution, and at the end of the day, we link to have a functional operational taxonomy applied across all 40 clients of ABI and also beneficiaries. And taxonomy that in being such, requires very few administrative and administrative capacities from organizations that implement. Or simply telling, workable document, not like a nicely designed, theoretically well justified document, but that has nothing to do with the reality, and that's very difficult to enforce. So this much about challenges that we faced. I also would like to say a couple of words about, because this was one of the key questions that were permanently asked by different stakeholders, like if organizational level taxonomy is required, in case of country has its own national taxonomy, or if there are organizations across country like ABI that have functional taxonomies, if national taxonomies is required or not. So there are a lot of, and it's not only in Uganda, it's elsewhere, because taxonomy and activities related to the taxonomies are fairly new initiatives. There is a bit misunderstanding and confusion. So we try to also provide kind of a bit awareness raising by defining and opening up the essence and what's the how these two documents are different and how they complement to each other. So and in case of any country, national taxonomy, as mentioned earlier, defines all potential and theoretically available sectors for the country, even notwithstanding the fact that there is currently operations or not. While organizational level taxonomy basically talks about the sectors where it's planned to invest immediately, or once funding, donor funding is there. Second difference is that organizational taxonomy basically structured around midterm priorities of the organization. And that's why we propose that along with reviewing its 5-year business plan, periodically the priorities of the taxonomy or API should be revisited. And these are two processes that can become, that can go in parallel in the future. And of course, in many markets where countries with help of donors design national taxonomies, there is need for establishing ESG reporting standards and framework on a national regulatory level, but also among institutions. So in many instances where a country doesn't have ESG reporting standards and framework, or on very early stage of designing or adopting these documents, some organizations, specifically the ones that are willing to issue green bonds in international capital markets, they define their own reporting standards and frameworks, and because they need to demonstrate to the donors that there is availability of well-functioning mechanism that will help to track the use of funds received and the proceeds from the funds, and to avoid a greenwashing. We've been discussing also because, as mentioned, the green taxonomy document itself is very standalone. It's a very important document. It's one of the pillars of ecosystem. But without other supplementary instruments and processes, the entire process of building, enabling green finance ecosystem in a specific country, in Uganda, will not be as effective. That's why we are also doing some kind of debates, discussions on what else is needed in order to make it functional. Because it's clear, if there are no significant upscale of green finance to Uganda or through ABI, then the essence of this document undermines. So along with designing rightly structured taxonomy document, the country, and here we are also talking not as much on behalf of ABI, but on behalf of the benefit of entire ecosystem. So here that's why we also reviewed how other countries are approaching this. And basically, these documents called differently under different contexts. Some countries call it green finance roadmaps, some countries call it private sector engagement roadmaps. Some countries, they don't have specific standalone pieces of policies, but they at least address all 4 areas that are mentioned here. Policy framework, enabling policy framework, scaling up green finance flows, ESG standards and frameworks, and last but not least, national capacities. Because once you introduce these documents, once you introduce new policies and procedures, you need to have adequate professional capacities, including staffing, that will be able to manage them. So our main message to the policymakers, to the other key stakeholders like private sector, leader, in this case ABI, did it first step. There is taxonomy there, which corresponds to international best standards. We are now thinking about the institutionalization and application of taxonomy and bringing it to the level of each and every organization. But at the end of the day, to meet national climate goals, to meet the investment aspirations in terms of green finance, additional steps are required. And the government needs to be, the other stakeholders need to be aware where they need to push the buttons in order to help organizations, green financiers such as ABI, to provide, to channel more financial resources from the international green finance markets. This was basically the main message that I wanted to deliver to you. Using this opportunity was once again thanks to all those who supported this interesting endeavor that we've been working during the last few months. I am sure that having such a huge leadership potential, capacity, internal capacity, vision on the green finance, ABI will be successful in implementing this, of course, with support of it, fellow donors and organizations, but will be successful in implementing this taxonomy. And I'm more than sure that very many other organizations, not only in Uganda, but in the region, will then replicate this document, because I believe that it's a good one, and good luck to all of you. And I'm ready to, at the end of the session, answer to questions if there are any. Thank you very much.
Thank you very much, Mr. Tigran Sukiasian, for that very comprehensive presentation on the taxonomy. And I think we now understand that green taxonomy is a really crucial guide for financial institutions to be able to green operations, to be able to expand their green portfolios, but more importantly, to be able to efficiently administer green financing. So again, a big thank you to you. Thank you. All right, ladies and gentlemen. So I think, as I said earlier, my first meeting with green taxonomy was, But now I'm more like, okay, I understand. I'm a little slower than most of the people in this room, so you'll bear with me. I'd now like to dive more into the Green Finance Fund, ladies and gentlemen. I know many of you have questions that you want answered, you want to have a better understanding. Earlier, Mona took us through some of the blend of financial instruments that, will be under the Green Finance Fund. You talked about the green lines of credit worth 120 billion Uganda shillings. Then, of course, the green guarantees at a risk share of 70-30. And then also the business development and support that is so needed, worth 4 billion Uganda shillings. So I know there's a lot more to learn, ladies and gentlemen. To tell us more about the Green Finance Fund, allow me to welcome from ABI Finance, Mr. Noah Owomugisha. Welcome, Noah.
Thank you, Crystal. Good morning, ladies and gentlemen, all protocols observed. Welcome from Tigran's presentation. I'm sure he has left us with more questions, maybe more convinced, or more confused, or more everything. But yeah, it is designed that way. Once we have appreciated the deep, heavy background, then we get into what we are going to do in small, very doable, actionable bits, which my presentation is going to shed some light on, but also to invite us to come and play our parts. So, yeah, you see the light has increased. Someone must be saying, let's go and open our eyes much wider to see. Yes, I'm Noah Owomugisha, like I've been introduced, and I have the pleasure of presenting the actions. You could have heard from Tigran's presentation that we need everything, from policy to tools to the money to invest, but also to the capacity building. So I won't waste a lot of time. Yes. So the taxonomy is summarized like this. Does this look more interesting? Thank you. So that is how simple the taxonomy is. But the other big book Tigran has tried to summarize is to make sure everyone is taken care of. Sometimes when you do this, agronomists, entomologists, breeders, biotech experts, engineers in energy, in construction will say, we are not taken care of. So the other big table, which he called the compendium, basically gets into the detail of each bullet there to tell us how you measure it, how you administer it, how you report about it, and the rest. So that was what he tried to summarize. Not a simple job at all. But for us on our side, after appreciating all that, then we come in here. If you observe, most of what is listed is what we are already financing, like from the financial institution side. This is basically what people borrow money to go and do, in simple terms. So, one, it is just to give you comfort and to assure you that you've been doing green finance to begin with. But secondly, that we now are trying basically to add structure to it and be more intentional, both in terms of capturing it and also in terms of reporting it. So, areas of focus, like Mona and other speakers who came before mentioned, is those three things. Adaptation, and in adaptation you're trying to do one basic thing, which is living with the changing climate. You may not stop the drought from coming. You may not stop the rains from coming. But what are you doing to ensure that you continue to produce, continue to earn from what you're producing, and continue to pay your loan? But as a financial institution, the question is also, how are you enabling your clients who need financing for this to be able to do it, to cushion themselves against the climate that is changing? Like we heard from Mona's remarks, Africa and Uganda specifically is a negligible emitter. So in terms of us causing climate change, we are really not very much responsible. But we are at least prepared to deal with the consequences. Yeah, so we must position ourselves, especially as financial institutions, development partners, and BDS providers, to be able to do this, educate people about it, but also do it. On mitigation, you're actually trying to make sure that you don't contribute to making the climate change problem worse. That's the definition of mitigation. Reduce emissions. If you've been using diesel to fuel your operations, switch to solar. Yeah, if you've been burning or allowing gases like from your residues, channel them through a biogas digester, get biogas, use it for lighting, then remain with your manure and take it to the garden. Simple things. Again, you've been financing this. Biodiversity conservation. We are looking at how to make sure every living organism is happy and comfortable. Why? If you look like at agriculture, we need pollination to happen for us to get seed or fruits so that we can eat or sell and make money. But you cannot have pollination when the bees are dying. So for example, if someone is using a chemical that kills bees, it automatically means that you'll have low yields because the agent for pollination is out of the ecosystem. The same applies to fungi. For example, mushrooms. mushrooms is a fungus. Or they are fungi if you're looking at the various types of mushrooms. So if you're going to eliminate fungi, then you will start to lose even some of the commodities that are crucial to our sector. The same applies to plant species. We are using them for shade. There are some which add nutrients in the soil. So again, all this is defined in the taxonomy. I'm trying to put some light on that to show you that, one, you're already doing it. Two, the bigger book is the science, is everything. But on our side, we have very deliberate, definite, actionable things we can finance, like Virginia presented, and then we'll be good to go in terms of adapting to the changing climate, in terms of reducing or not worsening the climate change problem, which is mitigation, but also making sure that all living organisms we need are comfortable. So, this is how we look. As you've heard from speeches, ABI works through financial institutions, ABI Finance, and before we started this greening journey, we said, let's talk to each one and see how we look as a sector. We have many interventions ongoing, but in summary, you'll find that over 70% of all our partners have green finance related products. Very interesting. But they focus on mitigation. Now, like I said, mitigation is reducing basic emissions, not contributing to make the climate change problem worse. The biggest problem for us is how to live with a changing climate, which means we need to adapt more than even we mitigate, practically speaking. So, but no one of those we are working with has a deliberate product they can flag off and say, it is a climate adaptation product. So, we'll have solar, very good thing, but it is reducing emissions. We'll have biomass-related products for converting, say, residue into energy, mitigation to a big extent. So we need now to support our borrowers to also to start investing in adaptation more. You'll actually find that most of the money we lend out, like for seed, which is an adaptation practice, is given out as a general agriculture loan, and therefore not recognized as climate finance or green finance. So we just need to tune up a few things. That's why I said we are already doing it. Now, another responsibility we have is to educate who we provide the financial services to. Now, we'll actually find that for the 30 financial institutions which had green finance products, most of them were doing promotion, but only to boost their sales or to get more people to take loans, but not educating them on why they need the loan. So you'll find someone saying, come for solar, come for solar, come for solar. We have a cheap loan for solar. But they are not telling you that, by the way, you're making the planet neater, cleaner, greener by moving away from your kerosene to solar. That is important because not every client is focusing on the light only. Some are also concerned about their children. They are concerned about the next generation. So that messaging needs to be improved. Then, there is also information services. For example, a farmer may want to know, when should I plant? When are the rains coming? Crystal perhaps will take advantage of this more. She said she prophesied or mentioned that rain was not going to come soon, and then it came, or the other way around. It didn't come. Yeah. So this is a service that, for example, financial institutions can offer. And the good thing is that all these services, in terms of how we can offer them, are already described in the taxonomy document. We have a section that deals with ICT, how you basically process information about climate, share it with people, multimedia in terms of channels. It has how promotions should be done, how messaging should be done. It is also able to define for us what is mitigation and what is adaptation practically. So again, Products we have 70%, which means the awareness is there, but we need to tune up what we are doing so that we are more responsive to the challenges of financing and agribusiness and investment in general for our borrowers. So that is basically the issue here. So here we are as ABI, like our partners who made remarks were acknowledged. We want to work with you through this journey. We appreciate that, for example, not all financial institutions have agronomists as staff, have biotech experts as staff, have engineers as staff. So we are coming in with this kind of support to bring consultants you may need, to bring resources that you may need to be able to position yourselves to deliver green finance in a way that is sustainable, but in a way that delivers the point of making sure that people in value chains continue to make money, but also that financial institutions' portfolios are de-risked and everyone is happy and comfortable from the climate change perspective. So I won't dwell so much in the detail. Maybe I can quickly, highlight under financial services development, we are adding a component of market-oriented awareness creation, away from what we've been doing of mainly MISs and internal, to have events which a financial institution can host, for example, like in the case of the Uganda Institute of Banking and Financial Services. Madame Goretti mentioned about it, but also make the entire public aware. Again, if you read those, you realize that everyone in the room has a role to play. Knowledge experts have a role to play. Finance experts have a role to play. And also researchers have a role to play. Developing these green products requires research to know uptake, to basically confirm feasibility. So we are offering the line of credit that has been talked about, and then the green guarantees have also been talked about in detail. Maybe I can highlight a bit on the risk share. We have been more on the 50-50 level, but we appreciate that some green investments do not have resale value, as much resale value as others. If someone has sunk a borehole and they default on a loan, it may not be easy for you to uproot it and take it to the bank branch and sell it. So we are saying we are coming in there on a case-by-case basis to work with you and increase our risk share so that you're comfortable. And because we know it's something that we must do to increase appetite, but also to increase uptake. Yes, so this is our roadmap, short term, basically projecting what we intend to do, again with you through beginning from a few months ago to now, where we are and where we are going next year. Today, of course, we've been able to launch the fund and the taxonomy. We are already working on partnerships. As you heard from speeches from the previous speakers, we have development partners on board. We have GGI on board, for example, which has come through to help from the technical side with the taxonomy. So we are going to continue pursuing those partnerships and formalizing them, not only from the point of meeting in places and we say we need to work together, but going all the way up to MOUs, up to contracts where each of us can commit to do what we should do to make green finance work. Second one is developing environmental policies. Why is this the immediate thing? Tigran mentioned the word greenwashing. I don't know if all of you heard about it. Greenwashing is overstating or stating with no proof that you're doing some work regarding green finance. That's what greenwashing is about. Now, one way you assess whether an institution is deliberate about these implementing green or sustainability initiatives is to go and look at their policies. You can have an anti-money laundering policy. You can have an HR policy determining how you handle stuff. Do you have a policy determining how you handle company business around environment issues? So we want to work with you to implement that as an immediate thing, so that any day, just like you're able to mention your mission, your vision, your values as an institution, you are able to tell anybody any day about what you really want to achieve. And I thank Virginia because she really took us in terms of what the objectives of equity are. So we need to do that the same. Secondly, we want to develop these materials. We want to unpack mitigation for the person in the bank who has come to borrow a bank loan, to borrow a loan to be able to appreciate. We are thinking of innovative ways, boards on walls of banking halls, posters, flyers, where someone can come and know, hey, if I'm borrowing a loan for manure, then it is a mitigation loan. If I'm borrowing a loan for irrigation, then I'm adapting my business, or I'm helping my business survive drought. So we'll do that, and again, it is going to commence immediately, as you see. Actually, part of the developing of the materials has started. So as we walk through with you next year, we should be able to have it. We are doing district level promotion events. Why? We have financial institutions which are not here in this room. We also have branches of financial institutions which are delivering on the green finance mission on a daily basis. They need to have events like this where we can meet with the Tigrans and everyone and have a discussion on how to make this work. So we want to take this gospel of green finance down to everybody. We have planned about 20 activations, and again, this can increase as we get more people to partner with, because we know for example, the development partners in the room, we are already doing work across districts. So this, for example, can be activities we can do together, and then the information goes out. We have the green loan products development. We already have the loan products, but like you saw, adaptation is missing. Yet it is the most critical at the moment. So we want to be able to get to you as the financial institution and have a discussion. Say, how about if you changed this? How about if you added this? So that we are addressing greening in total. We don't want to wash one leg. We'll still not be clean. And one leg, I'm meaning mitigation. So let's go for the entire green finance perspective in terms of how we structure our loans or design the loan products, and then we should be there. So again, we are working with you, each financial institution at a time. This is not going to be a blanket kind of thing. Yes, we may do it as a funding window, for example, but in terms of outreach, for those we've worked with, we work with each one individually at the institutional level. Then Green Finance Academy, CEO again of UIBFS touched it. We are keen because we must have a system of how people learn. Everything we like, we know, we do, there was a point we had to go somewhere and learn it. So we want to partner with you again to enable this happen. Institutions that are already in the space of providing business development services and trainings at academic level, we'll be working with you on this specific activity to enable that to happen. The last issue I wanted to mention under activities is the monitoring, reporting, and verification system for our investments. Most of our reports on agric still show that a loan is either agric or not agric. Those who manage to have some bit of detail will show that may be a green loan or non-green loan. Yes, but if I asked, so this green loan, is it a mitigation loan or it is an adaptation loan? Then that becomes an issue a bit. So we want to work with you to have that level of fineness in terms of reporting in a way that is convenient, non-cumbersome, ICT enabled, so that at the point of loan capture, at the point of assessing the borrower, at the point of the person coming to register or to apply for a loan at the branch, this information comes in. then it becomes easy even for reporting and even disaggregating the loans in the portfolios. So this is something we want to work with you on. Again, all our working is participatory. We come to you, we have a chat, and then we get the most convenient way of getting it done. We already have ongoing activities, which we are continuing for the purpose of ensuring that we promote green finance holistically. One of them is social and environmental performance management. We are working with a great partner on this called IANI. I have the representatives in the room, Dennis. And here, basically, is where we start to look at those aspects of green finance that, for example, institutions must mind about. We look at the environmental, yes, but we also look at the social. Why? Because if clients are not happy, if you're not training, if you're not including everyone in capacity building for environmental sustainability, adoption will be affected. If you're an institution that says some conferences on green finance should be attended by some people and not attended by others, then you will not succeed. If you're segregating against some portions of society or some groups of workers or not handling them, talk about modern slavery and the rest, you cannot be green. So we are already implementing this capacity building. We've run the first cohort. We are now on the second cohort. And we hope that we'll get more on board. But again, these are activities that are complementary to our green finance agenda. We have the peer-to-peer, mainly looking at BDS, mainly looking at governance and credit management. The reason is, much as we are promoting green financing, we must be well governed. You remember the mention about the ESG. So if governance has issues, then apportioning of resources, oversight will be compromised, and then sustainability is compromised. If institutions are not sustainable, then who is going to do the greening? So we want to avoid growing one shoulder of the institution and then another one is stunted. Then credit management, yes, you must keep in business. Investors must get their returns. So we are keen on ensuring that your institutions continue to be healthy, not only on the environment side, but also on the money making and the administration side. Then the last one is risk management. Again, climate change is a risk, classified as perhaps the most important risk after COVID. So we cannot afford not to be monitoring it on a daily. If you're going to have floods taking, or landslides, taking buildings which have been given to you as collateral for loans, plus the gardens where the crop was being grown, how do you deal with that? I give you collateral as my house, the flood comes or landslide takes the house and sweeps away the garden. How do you deal with me? So we are again keen on this, and we'll continue to offer this capacity building, but also to ensure that all our interventions are complementary. Again, yes, we can. The reason why you're here is because we want to move with actions and a list of to-do, each of us today as we live, so that we know, from our institutions what we will be offering our clients going forward. We call on you once again to come and partner with us on this journey. No one can do it all. I know there are institutions which work exclusively in West Nile, but they are implementing climate smart interventions. Those would be an ideal partner for West Nile. We have institutions which are working in Central only, implementing interventions. That would be a partner for green finance promotion engagements in Central. We know those who are only in energy as a sector. Again, under mitigation, we have energy as a sector. We have those who are in agric. Agric, we are mainly called on to do, rather invest more in adaptation. So those, again, become ideal partners for that. Each of us has a role to play. That's what I'm trying to emphasize. And as we go into next year, we'll be knocking on your doors. Please, one, to enable us access your institutions for partnerships, but also to enable us work with your teams. Like for financial institutions, we'll be going to branches. We have 20 activations covering moving away from deep western Uganda in Kabale all the way up to Guru, all the way up to West Nile. We'll be interacting with the loan officers from Centenary, loan officers from Equity, loan officers from Kashonji if you're in Western, or loan officers from wherever. So please, ours is a call. We are open to partnerships, and we hope we'll be able to make green finance happen. Thank you again for coming, because when I look, then every partner we need to make this happen is in the room. BDS providers, development partners, financial institutions, academia. I've seen people in academia, research. I've seen people in research who are defining the terms that Tigran was trying to take us through. So I thank you for coming, and we look forward to interacting more and making green finance happen. I thank you.
Thank you very much, Noah. Thank you for giving us a better understanding of the Green Finance Fund. Ladies and gentlemen, now we get to the point where, okay, we have this information. We understand more, but how do we implement? How do we use this information? So what are the application guidelines, right? I know there might still be a few questions, but we'll get to that. Before we get to some of the areas you want to know more about, allow me to invite Ms. Anne-Marie Mwaka to take us through the Green Finance Fund application guidelines. Over to you.
The lady standing in between you and your lunch, so I'll be snappy. Yes. So, welcome, ladies and gentlemen. All protocol observed. Thank you very much for coming. We are living in exciting times. It's not just Green Challenge, it's closer to Christmas. So, I will get right into it. My presentation. Oh, okay. So I'll get right into it and start with who qualifies for the green. It's okay, thank you. For the Green Finance Fund. Most of you have partnered with us, and nothing really is changing. So, for starters, we work with all tiers. You'll find us with the so-called big boys. You'll find us with the tier 4s, who are also big boys. So, everyone is a VIP. That gets you in the door. Then, at least have a minimum of 3% of your portfolio to agriculture. Then the other aspect, your equity should be a minimum of $500 million. But not to worry, if it is less than that, but you're interested in going the green way, we also have something for you. Minimum loan portfolio should be $500 million. If it's not yet there, we have something for you. Minimum period in existence as a financial institution should be 3 years. And by 3 years, I mean with audited financials. Then the PAR should be less than 10%. Ladies and gentlemen, it gives me great pleasure to announce that from what we've been seeing coming through from our partners, from the clients that we have, is that PAR, we've seen recovery really. At some point we had COVID, I think we hit, some financial institutions hit highs of 60%. And some closed. But we've seen recovery right now for the regulated entities. It's within the range of 5 and 8%, depending on the tier you belong to. And in the tier 4 space, we've also seen improvements to around maybe 8%. So yes, 10%, that is what we're looking at. And then you have to be licensed. For tier 1s to tier 3, it looks like common sense. By tier 4s, please, UMRA is your friend. UMRA is your friend. Please make sure that you have a license before you come to us. And then, finally, we need to have some structures of governance. Have a board, even if it's not strong, we can get to the strengthening, but at least let's have, those basic structures on which we can append everything green. We can't talk about having a green champion on a board when there's no board. We can't talk about having green loans when you don't have a head of credit and things like the CEO is the board chair, is the those kinds of things. So those are things that we need to correct such that we can be able to run the Green Finance Fund. Moving on to the products, we have 3 products we're offering. We have the lines of credit, we have the guarantees, and we have financial services development, which is basically BDS, business development services, to strengthen the capacity of the financial institutions to be able to give out these loans. Now, starting with the lines of credit, the purpose, of course, is for on lending to agribusinesses for green investments. We have the usual lines of credit for the usual business as usual, but for green investments, you have a product that you've developed for biogas, for let's say for valley dams or anything like that. That is what we're looking at. Then the size, we're looking at a minimum of $500 million to 38 billion for now. But even as our capital fund keeps growing, that ceiling of 38 will keep rising. Then, but for the tier 4s, please make sure that when you send through your application, it should not be more than 100% of your equity. That is where our appetite lies. We have up to 10 years. We are cognizant of the fact that some of these investments really have a long payback period, and you won't be able to service. You won't be able to have clients who can service these loans as fast as you want them to. So that takes care of that. And we have grace periods of up to 24 months on a case-by-case basis. On a normal day, grace periods are 6 months, but for green financing, some of these investments will require you to have a longer grace period. So that can sit on the table and discuss that. Then the pricing is risk-based, depending on the strength of the financial institution, and it's tagged to either the 182 or 364 or the CBR, plus a maximum premium of 3%. So the way things are right now, if you're to get a facility from ABI Finance, the 182 treasury bill is around 11-12%. So the maximum, if it's really, really expensive, and by the time you have a premium of 3, it is a financial institution that is really, really weak that we are taking a chance on, and that's what would actually get to the 3%. Then the bonus on the lines of credit is that we offer technical assistance to bridge the gaps that what we find when we conduct our assessments. So some of you have been beneficiaries, developing manuals for you, management information systems to improve your reporting, but also to improve your product offering, to include digital channels, that kind of thing. It comes bundled up with the lines of credit. Moving on to the guarantees. Our guarantee is really credit enhancement. We know that some of you financial institutions will not get into some spaces unless there's an incentive. And this incentive really rotates around the issue of risk. So as ABI Finance, to stimulate your appetite, to actually be able to lend to these green investments, we are offering guarantee cover. Ordinarily, we offer 50-50 risk share, but for the Green Finance Fund, we'll go as high as 70. And 70, ABI Finance will be covering 70, and then you can look for the collateral to cover the 30. So that will also depend on what exactly, what the riskiness of the green intervention that you're investing in. The minimum here is $500 million. We don't have a ceiling as yet, but to give you an example, the biggest guarantee cover we have with the financial institution right now is $100 billion. So if you have muscle, you have the business, please, you're welcome. Would be very, very glad to do business with you. The tenure is 3 years, but 3 years doesn't mean that the facility has to be 3 years. 3 years is to sign a contract. Once you sign a contract with an end beneficiary, for within that period, it's covered for the tenure of the loan that you have given out. So let's say the facility is 5 years, and you sign this year, even if the contract with the financial institution expires next year, you can still call on the guarantee when that contract is expired. I hope we are clear on that. Then the pricing is also risk-based and goes up to 1.2%, depending on the risk profile of the financial institution. And again here, depending on what we find with the financial institution, we work with you to plug the gaps. Finally, what Noah has been speaking to, we have financial services development, and this is largely to build the capacities of the financial institutions to provide green finance. For most of the financial institutions, it's been done, but it's not succinct, and it's not intentional really. You have an agriculture loan, for example. People borrow money, they buy improved seed, but you don't go asking whether the person is going to buy improved seed. You just ask them, do you want an agriculture loan? Yes, you give them an agriculture loan. That kind of thing. But that intentionality with the financial institutions, we want to build the capacities of this of you, our partners. And what we are offering business development services. We are offering technical assistance. If we have to hire support to come and sit with you, to develop, to refine whatever has to be refined, we are coming that route. We are offering matching grants, but then we also know that some of you actually have the muscle and are already on the journey. You just need a concessional loan to improve what you're already offering to your clients. So we're also happy to partner with you on that. Then the interventions, we have product development. Most of you, this might be the beginning point. In as much as you want the line of credit, you want the guarantee, the product development is going to be very, very key, because you can't lend to what you do not have as a product. Then the issue of management information system. I think it's Jackie who spoke to the issue of measurement, and Noah has also spoken to the issue of you have the cases, but they're not well articulated. We'll be supporting on that front too. And for the regulated entities by the central bank, what's in the offing is that this is bound to become a regulatory issue at some point. So this is a good opportunity for you to partner with us to be able to build these structures such that when the time comes and it becomes a compulsory thing, you're good to go. You have experienced, I'm sure some of you went through the phase of agriculture financing when we had to separate. My background is in commercial banking, but the whole issue of separating agriculture portfolios out of the entire portfolio. In the wake of the whole mantra of value chain financing, for a financial institution that did not have the structures, it was pain. It's painful. So this is an opportunity. 2023 is our year to make these things right. By the time the regulator catches up with us, we'll be good to go. Then, of course, staff training and, of course, financial literacy. Our end beneficiaries need to be able to understand these green things. So while we're giving them the loans, they need to understand climate change and the impact, and to also be intentional about it. And finally, we'll be supporting on the development of policies and manuals. So that is about it. We'll open up for some questions, but for now, I hand over to Crystal. Thank you very much.
Thank you very much, Anne-Marie. So, as you mentioned, thank you for going so quick on that. Lunch is waiting for us, but before we get to that, I'd like to ask who has questions. And again, Anne-Marie, Noah, if you are available to answer the questions, we'll jump straight into that. So, or was everything so clear? All questions answered? Do we have any questions in the room?
Yeah, thank you very much indeed. Good afternoon. My name's Martin Fowler. I work for USAID. It's really a comment on the presentation given by Tigran on the taxonomy. I mean, I think it's an amazing job that's been done. I'm just a bit worried about it because, first of all, I'm worried that I didn't really understand what he was saying about the institutional versus the national, and I'm worried that maybe other initiatives have been done already or are in process or will be done, which could duplicate the work that's already been done. So I would urge this ABI to put this out as much as they're doing now, but to advertise it very broadly, that this work has already been done, that it doesn't need repeating. And secondly, he mentioned one of the big constraints was the challenges was the availability of good quality data and information. And that's where I think this thing can come badly unstuck, because I just don't know, looking at some of the targets that he had there, I don't know where they're going to get the information from in order to be able to tick the boxes to become a green intervention. I mean, for example, there was to verify the GHG balance baseline is calculated for above ground carbon pools based on growth yield curves. Well, I don't know where you start with that. Maybe some work has already been done, but it just seems that there's a huge amount of data required to get this system up and running, and I'm not sure that that data is available in the country. Thank you.
Thank you for pointing out those areas of concern. I think Noah will be able to address them. Yes? You want a microphone. You don't want to go back up there.
Thank you. Thank you, Martin. Both concerns you raise, I think they are for noting. Yes, duplication risk, absolutely. And that is why what we've done with this process so far is to make sure everyone in the value chains, at least at apex level, rather everyone in the financial services sector level is involved, but also key development partners who are in this space are also involved. And as you see, BOE was here, UMRA unfortunately couldn't make it, but we had invited them as well, but they are also part of the engagement that led to the taxonomy. And we already, for example, have feedback on who else is engaged in taxonomy development. We know, for example, we don't have a national taxonomy yet, but it is definitely going to have all these sectors in it. So we are part of the process, and we will continue to be part of the process. One, to contribute what we have already done, but also to see how to diversify and also how to adapt what we already have in-house to match the framework that will come out nationally. Our taxonomy is benchmarked already on existing global level taxonomies, EU, Mongolian taxonomy, and others, as you could have observed on slides Tigran was showing. So we are aware and we are present. That's why we try to make sure we keep in touch with everyone in the ecosystem to ensure that we don't do anything in a silo, and then we have that risk, definitely. So thank you for that. Good quality data, yes, absolutely. It is a big issue. That is why we're highlighting the monitoring, reporting, and verification systems as something we want to start on immediately. One, if you don't have a baseline, you start with the basic principles, and then as we go, we try to get into that space. The practice we have at ABI is for whatever we do which does not have a baseline, we use the first year of implementation as the baseline year. Then we start to program and to measure based on that sometimes. So we appreciate, and then we call again on experts in these areas, because we know there are people who are already CG centers, narrow. If you're looking at biomass-related things, basically the energy, they are again experts in terms of research in that area. We are keen on having them. We recently did a stakeholder engagement with academia, and it was meant to address that gap. We know that we don't know it all. So we are trying to say, where do we go? Centers of excellence for knowledge is definitely academia, and we will continue to do that. So kindly keep your doors open for us, so that when we come to you knocking for knowledge and hand-holding, then you're able to assist us accordingly. That's the quick feedback I can give. But again, Martin, thank you so much for raising these concerns.
Thank you. I'm over here for the second question.
Thank you. Thank you, Abi Finance, for this great initiative. The taxonomy is very helpful, not only for the beneficiaries, like the beneficiary institutions, but I think for even those others. Maybe to introduce myself, I'm Francis Mwesije, Chief Economist, Uganda Development Bank. We have related initiatives around green financing, and I found this real helpful. I only have just a follow-up question. Now you talked of greenwashing, and I was looking at, there are two ways really. One is to have those guidelines and key indicators and policies like you've indicated for user institutions, but I think there is another, beyond that, really follow-up to make sure that there is no diversion. I could show you that I will use this money for green-related initiatives and activities, but either that institution or the user, the end beneficiary, can divert that money. So how do you really, what controls do you have in place? What systems do you have to make sure that there is no diversion, and which is related to greenwashing? The other one is M&E. I think all these should end up addressing climate-related effects. We've talked of mitigation, adaptation, and so forth. What mechanisms do we have in place, especially for those apex or the institutions that will benefit from this fund, to make sure they monitor, evaluate the impact of these interventions in as far as green-related or climate change-related activities are concerned? I think that is important, and I find we have a huge gap in this space. Put in place a number of systems, but we still see that as a gap. Thank you.
Thank you very much. All right.
Thank you so much, Noah, for the presentation. My comment is on the taxonomy. I happened to casually peruse through the compendium of the sort of areas of engagement, and the content is very, very technical. For instance, when you talk about carbon sequestration, to a layman like myself, who is a social scientist, it's hard to comprehend what are the parameters of carbon sequestration. So, to start with my question, I throw it back to Abi Finance. Do we have another step where we are going to make this taxonomy very simple for a layman like me to understand and interpret in my own ways, but making sure that I adhere to the principles embedded within the taxonomy? Thank you so much. I'm Charles Owor. I work for the Danish Embassy as a senior advisor, access to finance. Thank you.
Thank you, Charles. Okay. Yes, please.
Thank you so much. Maybe I'll start with the one of Charles. Yes, as I speak, we have already decomposed the taxonomy to bullets. And I think by end of tomorrow, just next to the broad taxonomy on our website, we'll have that version, the smaller one, at most 2 pages, which you can take, and then it will help you basically to define what is green and what is not green. Again, the reason why we are starting with a big document is to avoid quoting just one scripture from the entire Bible and projecting it as what the Bible says only. So by tomorrow we have the big taxonomy, but then we have the smaller version. Wallet thing, something you can just have in your wallet, have in your purse, and go with it. The same we are replicating in our information, education, and communication materials, because no one is going to the bank to read that thing, the taxonomy, but they want to know, if I'm going to mulch, what am I doing in simple terms regarding climate change? If I'm buying seed that has been adapted or against stresses such as drought, such as tolerance for water, what am I doing? So we'll do that, we'll have it on boards. All ICE materials objective is just to simplify. layman, grandmother language in terms of understanding for everyone to know what they'll do. So that risk we really appreciate big time, and we are dealing with it head on. That is why we do not want traffic to our website today or tomorrow, getting there and then they can't have something they can consume. Thanks for that again. We have Francis from UDB. Thank you so much. Greenwashing is real. In fact, for us at ABI, we recognize it as the main risk for green finance. This is the first risk. If you go on our risk matrix, this is number one. So what we are doing is, again, to push. If you have observed the last bullet on what we are doing under financial services development support, is to support us and institutions we are working with to put in place those data capture, the monitoring, reporting, and verification system. The word why we emphasize verification is to deal with the issue you raise of, after all, they are not here. We have to find ways. At ABI, we usually do impact assessments, which go beyond, for example, the financial institution, pick at random, look at who has borrowed, and then go in and go up to the farm and see, is the garden there? Are the contours there? Is there evidence that they bought the improved seed? So we have a bit of that, but again, each one has a role to play, but also we have limits in terms of how much we can control. What I can assure you is that we are doing our best. Then the other issue is we are looking at, on M&E side, ICT-enabled data capture systems to avoid these issues of carrying files that get lost, that tear and break when it rains on whoever has gone to the field to appraise a loan or to monitor it. So we hope, again, these ICT-enabled applications will help. We are in touch again with the leading institutions at these competencies, IFAD and the rest, who we are working with specifically, for example, on the monitoring, reporting, and verification tools to ensure that we capture that, at least to a level that meets global standards. So we hope, again, as we work with you, we'll continue to expose you and also consult everyone in the ecosystem on how best we can contextualize. Most of this information still comes with a global outlook. If you realize from Tigran's presentation, he's talking from a global outlook in terms of green finance. But as ABI and UDB and everyone in the room, we then get this information, summarize it, twist it to match our user needs. So we hope, again, with you, we'll be able to score that point. Thank you.
Thank you very much. Okay.
Thank you so much, guys, and we really appreciate this intervention. My name is Clinton. I happen to be facilitating the sustainability programs at UMI. It's very important. You've actually responded to one of the questions that I wanted to know. At what stage do you come in to assess the end users? I can tell you, I've seen Goretti here representing an institute that takes care of the sector players, but you're leaving out the end users. When you look at the FMCGs, let me give you an example, like the East African breweries, and consider the value chain that deliver the products that improve on the production capacity for East African breweries. When do you come in to assess that they don't actually practice what we call the sustainability or the green marketing? That's one area that you should look into. And then we wanted also to understand whether you've mapped out these stakeholders, especially from the side of academicians, who could easily come in to support this very good activity. I happen to be one of the certified carbon literacy trainers in this economy, but we've not seen that right stakeholder mapping procedures to see that even the end users, they actually come to benefit from these green financing products. Thanks very much.
Thank you for that feedback. Over to you.
Okay, thank you, Mr. Mawanda. Regarding stakeholder mapping, yes, our outlook for stakeholders is based on where they are excellent. For example, when we are targeting academia in the just concluded stakeholder engagement for academia regarding green financing, we were looking at the sectors where the various academia fall. If I'm looking at manufacturing, I know I'll be taking the engineering side most times. If I'm looking at agric, I know the faculties I'll have to go to when I go to Makerere, for example, or any other institution that is a lead. So we have a very, very focused approach to stakeholders and even to partnerships. For example, a case in point is GGI. We selected GGI as a go-to because they are the leading globally in terms of pushing the green growth and green finance agenda. So again, when we get like aspects of carbon, we are looking for experts who is certified in carbon in Uganda. So we are keen on that, and definitely, even if you look at the way everyone here is in terms of what they do, you observe very, very clear and deliberate selection process of who we invite to ensure that the sector issues are taken care of. You mentioned the balance between the money-making bit and the environmental sustainability bit. Let me take an example of seed. All seed that narrow releases, much as it may be adapted to climate change, it must hit a certain threshold for yield. So it means if we are promoting a variety that is adapted to drought, we also know yields are guaranteed as long as you're growing it. So we don't leave that there. That is why our impact, we look at it at about 3 or 4 angles. We look at the income bit, we look at the social inclusion bit, we look at the environmental sustainability bit. If you are an enterprise, we look at the profitability bit. We want to be sure that everything you're doing is inclusive, you're making money out of it, and also that it is environmentally inclusive or sustainable. So, yes, your concern is very valid, but again, I would like to appreciate and also bring it to your attention that we don't only look at environment per se. We are making sure everyone is happy and comfortable at all fronts in terms of implementing the greening agenda. Thank you.
Thank you for that. We have another question over here on this side of the room.
Thank you, ABI Finance, for organizing this with the development partners. My name is Rachel Vanessa Muhwezi from Uganda Microfinance Regulatory Authority. My comment would go to the last presenter, Madame Anne. As she outlined the requirements for accessing the green finance to all financial institutions. The pledge from the regulator, from Uganda Microfinance Regulatory Authority, I think we have eased the institutions which will be able to access this fund because we have categorized our institutions in terms of their loan portfolio size. As she mentioned, the fund would be accessed by institutions with 0.5 loan portfolio. We categorize those institutions as B category. So the support, as UMRA, we pledge the support to ABI Finance that we shall be able to support the Tier 4 microfinance institutions to be able to access this fund. Thank you so much. That was the comment.
Thank you very much, Rachel. That is well noted. And I will be at your door. I will be at your door to get that list such that even the ones that we are not partnering with, we can actually access them directly. Thank you.
Thank you. That's a serious pledge right there. I believe there was someone on this table. Your question was answered?
Evaporated. But I'm looking at the issue of, this is a global issue, global and also national issue, the issue of climate change. But it takes local action to be achieved. Now, Noah, what I see is that you just have a section, yeah? Now, let's look at how many Ugandans access these financial institutions, first of all, yeah? And yet these are the people who are, call it, contributing negatively to the environment, okay? You get it? So how many Ugandans are banking or go to the bank? Are you getting me? So me, I'm looking at the local action. I'm looking at the impact of what you're going to do on the down there in the grassroots. So I'm looking at you people just taking up the upper layer, which is maybe like about 10% of the Ugandans. And yet the ones who are going to greatly affect or impact on whatever you want to do are these ones at the grassroots. And your intervention is just hanging up there. And they are not in these air-conditioned rooms. And I don't think any of us from here will carry this gospel and take it down to the grassroots. So at the end of the day, we will just hear that such a package or something came into Uganda, and yet the real people down there even don't know. And also I want you to make it very simple. Let the communication be very simple. What that old man, old woman, that illiterate in the village, yeah, can understand and take on. Thank you.
You remember, thank you. It didn't evaporate after all. Okay, thank you for that. Do we have more questions? Okay, one over there.
Hello, thank you. My name is Julius Atlinde from the UN Climate Change Regional Collaboration Center, which is a collaboration with we have with the East African Development Bank. I congratulate Arbitrust for launching this great initiative. Climate finance is a really topical issue for all least developed countries. My question a bit related to greenwashing in some kind. Noah, you earlier mentioned that from your survey, about 70% of the institutions had some kind of green projects, but without a dedicated product. So when you start to label instruments as green, again, the critique that will always be on your door is how are you ensuring that the projects you are financing really need the green finance, and they cannot be addressed by the traditional financing products on the market. So it would be good if you can just briefly highlight how with the fund you'll be actually requiring projects to demonstrate that they really need the support of the fund, and this cannot be addressed by the existing products on the market. Yeah, thank you. That's all.
Thank you. I'll allow you Noah to answer that.
Thank you, Mr. Atulinde. Maybe I'll start with your comment regarding greenwashing. This is why we are pushing for the taxonomy, because you cannot. Yes, we want to get to a point where everyone is sure of what they are doing, but again, if you go through that taxonomy, there are sections which Tigran was calling sectors, which basically place everyone where they are. For example, if I'm into solar, I'm not going to start looking into ICT. I know I'm in energy. If I have a solar product that has an ICT component, then I'll know I have co-benefits of ICT. For example, you have a solar equipment, but which is paid on a pay-as-you-go. In terms, use it based on a pay-as-you-go. So it has an ICT component, but also has an energy component. So the taxonomy will be able to help us do that. And again, this is why we are inviting everyone to start to go to this thing and use it. Pick a sector, just read it and master it so that you know what is eligible. So with the reason why we really wanted to mention the taxonomy before we mention the fund is to make sure everyone knows what we are talking about under the fund. The other issue is on matching loan products with green. Again, we want to get to a point where a financial institution can say, for us within the green financing space, we are focusing on energy sector. For us within the green financing space, we are focusing on agriculture or on adaptation with that level of clarity. And the taxonomy is able to do that. I like likening the taxonomy with the Bible. You will always choose whether you want to read from the Old Testament or New Testament. You'll always choose whether you want to read from John or Acts or Luke or Genesis or Lamentations or Exodus, because it is clear. So the taxonomy does exactly the same for us within the green financing spectrum, where you're able to say, today I'm focusing on manufacturing. How do I go green within manufacturing? How do I go green within energy? How do I go green in ICT? How do I go green in agriculture? So we hope, as we even design products, we'll be able to have that level of sensitivity and therefore address it. So I hope Mr. Tulinde that sheds a bit of light. Again, UNFCCC and the Regional Collaboration Center is one of our partners and a target in terms of, because you're the centers of excellence for green growth and green financing. So again, we are looking at how to collaboratively work with you to enable this happen. It's about collaborations, it's about partnerships. ABI cannot do it alone. We are just like a compound, but which is inviting all visitors to come and play their part, whether it is dancing or drumming or singing. So everyone is welcome on this journey of greening. Yes. Back to you, Crystal.
I have a question here. Thank you.
Well, thank you all. I'm Richard. I work for Nyarabur Sacco. I want to direct this to Anne, especially on the line of credit where you put a bar on the PAR at 10%, and yet we are yet recovering from economy, and we have also been hit hard by the COVID-19. You know, from the medical perspective, they say you seek for doctor support when you are sick. So if this is put at this rate, I don't know whether it will not exclude us. Kindly try to respond to this. About the green guarantee, I think there we are okay with you. My concern is on the PRR. Thank you.
Thank you. All right. I think I'll make my way to the middle of the room, take another question, and then they can both be answered.
Thank you. Just in addition to what Anne-Mary was discussing, about the pricing of the line of credit and the guarantee, I would request that we make it as attractive and competitive as possible. I wouldn't wish to see the fund being outcompeted by other available funds by financial institutions. No matter the risk-based pricing that you talked about, you need to think again how we can sell this, because there are so many other players in the market and would wish to develop a product that is competitive for customers to take up. Again, in relation to what my friend was talking about, the slow pace of economic recovery now, and you are talking about the PR of 10%. I don't know whether this is 30 days or 1 day, but for supervised financial institutions, I would request maybe you look at NPL than looking at PR. Otherwise, PR may not be a factor to sell currently as the economy is recovering. Thank you.
Thank you. I think I'll come to you, Anna.
Thank you very much. I'll start with Richard. The same question that Ali that Ali also has about the PAR. Let me stand where I can be seen properly. Our basis for the 10% is actually informed from what's happening in the economy. Tier 1 financial institutions, average is 5.3. Tier 2s at 6, Tier 3s at 8, Tier 4s from the ones that we are dealing with really are less than 10%. So some are outliers and those will be handled on a case-by-case basis. But believe you me, financial institutions are fighting to improve this PAR. But to address you, Richard, the questions that I'll come with is, what strategies do you have to improve this PAR? What are we doing? And then, how do we support you to improve? We've had, Noah has spoken to some of the interventions we have, the post-COVID interventions that ABI has, the risk management and the like. These have all been done in a bid to support financial institutions to improve their risk management. And one of the issues that we are looking at is the issue of delinquency management. COVID exposed very, very many things. So now that we are recovering from that, what are we doing to actually be better? If something else, if there's Ebola and if something else hit us, would we go back to the same thing that happened in the past? So we take the learning. For the outliers, we handle it on a case-by-case basis and see how we can support the financial institution. Our mandate under financial services development is to actually work with the financial institutions that are weak, that are struggling. That is how we grow our client base. That is how we manage to reach the smallholder farmers that we are very passionate about. So we'll sit and discuss. Then the issue of pricing. While we are driving the social aspects, we are driving the environmental aspects, we need to, sustainability is more than just these things. Financial sustainability is also key for ABI. You do not want to find us closed next year. So our pricing is very competitive. Very competitive. And using some of the examples we have right now, there are some financial institutions actually that have castigated me of, hey, 12%, you're very high, 11%. And then I tell them, 364 treasury bill is at 15.5. We have left 4 percentage points on the table. You're going to take the money, before you deploy it, you're going to buy a treasury bill. What do you have to say about this? And you think too much. And then we get into that discussion. These things are found, they are well researched. We will not give you something to fail this. It is not happening on ABI Finance's watch. It is not happening on our watch. We want this thing to succeed, and even if inflation hits 30%, at least at some point we'll say, okay, now this is the maximum we can go. Because we've been there before, where central bank rate was at 17% and inflation was 28%. But at that point, ABI, I think the maximum we went in lending, even when the central bank rate was 17, was 14. So we have the financial institutions and most importantly, the smallholder farmer at heart. So these are discussions. These things are not cast in stone. If something is complicated, we sit down and talk. That is how business works. I'm head of business and anything is fair game. We sit and talk.
Thank you. Great. I was fearing that Anna was going to say what I wanted to mention about smallholders. So ABI has heartbeats for the least included, the most marginalized. That is why in our CEO's speech, the word smallholder farmers comes before SME. So we are actually saying, if you're not dealing with the last person out there, then you're not our ideal partner. To answer the questions of, for example, those of us in this room being those who are not the actual farmer, that's the business model. If you're discussing transportation of people from Kabale to Kampala, you call people who own buses. That's the model. I want to get people from Kabale to here, I call people who are in transport business because they have interest in getting those people to Kampala because they benefit from it. So it's not that we are leaving the marginalized or those who are farthest from here, but we want to discuss with people who can do this in large numbers. ABI cannot reach every farmer in the household, but Equity is reaching one, Opportunity is reaching another, Ranyamahembe is reaching another, Kashonji is reaching another, Alutkot is reaching another, Mount Otchemetu is reaching another, Stanbic is reaching another, etc. The list continues. So that's how ABI works. We want to work with those who have more hands than us to reach everyone in the ecosystem. Secondly, we often, during our monitoring, also reach out. So we say, okay, you who is working with us, give us a list of those who are taking loans from you. Then we go and ask them, did the loan come? Yes. Did you get the whole amount or the loan officer took some? I say, I got the loan, the full loan amount. Where did you use it? I bought this handheld milling machine. I'm able to do milling. My yield has increased. I'm making more money. And the cobs I get, I use them as a source of energy for cooking. So we always deliberately go all the way to ensure that we reach the last person. Again, we are open to advice. How better can we do it? If you have ideas on how to reach a farmer in Yumbe or in Nebi or in Chisoro who we have not reached, come to us. Our offices are open every day, more sustainable. I hope that helps to throw some light regarding our model.
Thank you very much.
Farmer is number one. Everyone else here is an implementing partner to enable us reach the farmer. Thank you.
Thank you very much, ABI. Charles Singoma is my name. I am the managing director of Hofocam. Mine is directed to Anne. We are troubling with the issue of turnaround. This doesn't seem to have come out very well. What is the time frame institutions should work within in order to strike a deal? Because institutions are getting frustrated as a result of delayed turnaround. And this was evident more especially when it came during post-COVID era. Thank you.
Okay, thank you. We are about to wrap up our Q&A session. So I'd like to know if anyone else has a question. I don't know if I should come to that side of the room. I don't want you to feel ignored. Okay. Anne, you're going to answer that one? Thank you.
Thank you very much, Mr. Isingoma. On the issue of turnaround time, for starters, COVID and right after COVID, I would like to apologize on behalf of ABI because too much was happening. Many circles were rescheduling, thus changing this. We were grappling with many circles, making sure that none of them sinks. I'm glad to report that none of our partners went under. Now, post-COVID, the issue of turnaround time, it takes 60 days to process a facility. But I will give you the commonest areas where the delays come from. You are a general manager and the person we are dealing with is your finance person. Getting information, probably we will request for, give us your cash flow projections for the next year. That can take another 1 month before it comes through from the financial institution. Then you start, until you engage the CEO, which it comes off as reporting. If you're dealing with a finance person and things are not moving, other times they send you, go to our legal person. Then the legal person tells you, we are outsourcing this, that back and forth. But I will tell you that for the financial institutions that have brought, we have some pretty smart ones that bring everything with a checklist well outlined. This tick, this tick, this tick. Those ones, really, we don't take a lot of time. So it's the back and forth of you didn't give us this, of oh, that one is out of office, first handle that. And usually it's a trick of booking space. I do not know exactly what that means. Of let me book space, I first give you half a file, I will come back later. Ladies and gentlemen, we will not chase you when the file is full. There's no such thing as booking space. So even when you bring and it's incomplete, we shall still pend it until we have all the information. So that is usually where the delays come from. So our dear CEOs, kindly pardon us. When we are dealing with the people below you, sometimes that is what happens. Forgive me, maybe I have reported, but yeah, that is what happens. But we are working towards making sure, having a checklist to make, we've simplified the application form. What you'll find on the website is a lot simpler. The questions are more direct. Where we did some refinement, where we thought there are redundancies, where one question can answer another question, we've tried to remove as much as possible to simplify both your lives and our lives. But if anything is delaying, please, I will give you my business card. Just give me a call of why is this delaying if you need a thorough explanation, and then we'll be able to help each other. Thank you very much. I hope that addresses your question, Mr. Isingoma. Thank you.
Thank you, Anne. Thank you very much. As we wrap up, is there one more question? Okay, any final comments from you, Noah? And you mentioned the website, that's abi.co.ug. Please feel free to go and look for more information. And I think it's very clear, the doors are open. You still have more that you want to be explained, more concerns. I actually have to say thank you for your feedback and your concerns, because highlighting that means we can move forward on the same page. Ladies and gentlemen, I think that brings us, okay. Ladies and gentlemen, that brings us almost to the end of this get-together. I'm going to say that because now at the end, it's a get-together. I'd like to invite back the CEO of ABI Finance, Mona, to make the closing remarks.
I think I'll stand right here with you. Ladies and gentlemen, it's been very productive, and I can't thank you enough for your time. You've been here since 8 in the morning, and especially this last segment we've heard from you, the questions you've asked. We've taken note, we're learning, we continue to learn, and we generally just want to thank you for your time, for your engagement, for being with us this morning, and for what looks like an enthusiastic response to our call from the Green Finance Fund, the Agribusiness Taxonomy, and we look forward. Our doors are open, as Anne-Marie said, and please take her seriously. She's going to be in all of your faces, and so will all of us be. We genuinely want to keep working with you, and we look forward to a greener 2023 and beyond. Thank you all very much, and you're welcome to continue our discussions over lunch before you head back to your busy desks. Thank you all very much for your time. We appreciate it.
Thank you. Not much more to add, so please make your way to lunch. Bon appetit, and thank you for allowing me to be part of your morning.